What's up, everybody? It's your boy, Brandon, back with another edition of the Macro Insights podcast. But first, before we get started, a little disclaimer. I am not a financial advisor, and the guest is not giving financial advice. So everything you hear on this podcast is strictly opinion and should not be taken as financial advice. We disclose if we have any holdings discussed in this podcast, and you should not be following us as financial advisors. You should discuss this with professionals before you get involved or invested. And as always, it's not financial advice. So please, please, please take this strictly as our opinions and for entertainment purposes only. Now let's get into the show.
Mr. Green Candle, Mr. Phil, how are you guys doing today?
I'm doing well, man. I'm doing well. How are you?
Extremely well. I appreciated Jerome Powell's comment. I'm sure Phil has a lot to say on that. And I just have to say, BJJ, I like that name.
Yep. Yeah, it was it was definitely a quality talk. I got a lot of the tidbits here and there, just from like the Twitter anecdotes. So I'd be curious to kind of hear what other people have to say about it. But we do have a man of the hour coming in, hopefully sometime soon. And so yeah, I mean, he's kind of I'm sure he's got some opinions on what Powell has said too. So it'll be a great discussion.
Evening, fellows.
Yep. So, yeah. So, I guess David, why don't we, while we're here, here is the man, the myth, the legend, Tom Luongo. I just sent you an invite to speak, so feel free to come up when you're ready. Tom, how you doing, man?
I am good. How are you guys?
I'm doing well. Um, Tom, yeah, how are you doing this evening? What are you up to tonight? And yeah, we'll just get it started there and kind of see what you have to think about maybe the comments from Jerome Powell today, and then I kind of want to get into your article that was featured on Zero Hedge as well. So,
Sure.
but we'll start off with the news today, Jerome Powell, and all that. So,
You mean resting hawk face Powell?
yeah, exactly.
I every day it just gets. I hate to sit here and kind of gloat or anything, but you guys can't see it. But this is my smug face. Like it's the old Jeremy Clarkson thing. Well, this is my smug face, and I've been saying this for a while that the Fed just has no incentive to go back to the zero bound unless they are interested in committing ritualistic suicide. And when you really map out their incentives, it really just comes down to that. So I was not surprised at all that Powell threw any, didn't throw the markets any kind of a bone today. Didn't throw the the credit markets. It's really about the sovereign credit market, the sovereign debt market. Didn't throw throw them a bone at all. He's been consistent in his statements since the day he was reaffirmed or reconfirmed as FOMC chair that he would be effectively, he's not saying this, but he's effectively saying, look, the Fed put is dead and I'll need to, stop thinking that I'm Janet Yellen, and it's just that, or Ben Bernanke, because I'm not the second coming of Bernanke. I'm not the second coming of Greenspan. I'm not an egghead academician like Bernanke. I'm not a guy who finally feels like he's being accepted. Like, you like me, you really, really like me, which is apparently what Greenspan, loved the limelight because, he was the jerk, he was the dork in college, in high school that no one liked and he loved the limelight. And then there's Yellen, who's always just been, I don't know, the doctrinaire, Keynesian. And he's not those people. And he wasn't put in charge to be that person. He was put in charge to end the coordinated central bank policy of making the world safer, globalism. And he was put in charge by Mnuchin, Trump, and and the rest of the people who are the shareholders of the Federal Reserve, and certainly the New York Fed, which are the New York banks. So that's the way I've always looked at it, and I'm not surprised at all that he's doing this. I mean, once I finally mapped it out, I was like, this is the way this works, and that's it. So I wasn't surprised. I enjoyed the hell out of it, actually.
Yeah, and I mean, it seems like he's kind of doubled and tripled down every single chance that Powell gets. When he
Yeah.
kind of gets up in front of people and kind of is talking about that. So, you know, I guess why do you think that there's the perception out there that that there is going to be a pivot, or it seems like there is some the differing opinion. Like, why do you think that is that they think that Powell might kind of flip the script on it maybe later this year if conditions worsen?
Well, again, I don't think that Powell will continue without regard to he will basically go scorched earth on the world. Like, I don't think he's going to do that, but he's going to continue to raise rates and to, as Daniel DiMartino Booth keeps putting it, allow QT to tick away in the background and to do what needs to be done to shrink the offshore dollar markets. Because look, we have this massive shift in the structure of U.S. dollar funding markets happening on June 30th. The shift from LIBOR to SOFR is the most monumental shift in the U.S. dollar markets since the creation of the U.S. dollar, when you really stop to think about it. Because for more than 100 years, LIBOR has ruled the day. So ultimately, City of London and Europe have dictated, the cost of dollars. And certainly post Bretton Woods and with the Marshall Plan and the rebuilding of Europe, I mean, that was a good one-way trade for, the U.S. And it was very good up until about 2008. So I think he doubles and triples down simply because he has to break this mindset that the Fed is always there to bail everybody out, and that's not the case. I mean, look, I don't like central banking. I think central banking is dumb. I think it's tyrannical. I think it's all of the things that your classic sort of Austro-libertarian, hardcore Bitcoiner gold guy would argue for. I mean, my mentors in this stuff are people like Gary North and Mises and they're the extreme guys, right? But that's nice, but that's not the world we live in. So I can see Powell at least wanting to get the Federal Reserve back to just the guarantor of U.S. corporate paper like it was originally designed to be pre-FDR. This is the thing. This is a point that Martin Armstrong makes on a regular basis. I don't happen to agree that that's the right way we should structure our banking system, but at the very least, that's a hell of a better system than the current one we currently have. So, I'm willing to get to the world I want to live in, or the world I think we should have, and I would advocate for by degrees. And if that makes me a heretic, well, I don't care. Just it's not about it's not about morals or philosophy or any of that stuff. It's about practically living in the moment and how can, we extricate ourselves from this situation. You can't just flip a switch tomorrow and say we're going back to a 100% reserve banking system. That's just dumb. That would, we'd be in Mad Max world. That would just be dumb. But to gradually shift us away from where we are to where we kind of need to go, okay, let's go there. I mean, even Ron Paul always said, hey, why don't we just send the budget back by 4 years? Why don't we just take, in 2016, he said, hey, how about we just roll the budget back to 2012? And that was anathema to people. And I'm like, yeah, how about we roll the budget back on Capitol Hill back to 2018? And then tell me we can't afford the interest on the debt at 5%. Really? Okay. Like, this is the thing I don't understand about I can't understand about the financial commentariat, right? This is what bothers me to know, and it drives me nuts. Like, the very people who argue that we should have rational Federal Reserve policy, when we get rational Federal Reserve policy, they get angry about it. Like, are you kidding? What? Because you always wanted to be, you'd rather be right than have the world, get better? Like, what? I don't know. That's not what I'm interested in. So I don't know. That's been my perspective on this, and it's very important to understand that there's an order of operations to the way things are done. That even if you were to unwind, even as libertarians, right? I always argued, even when I was active politically as a libertarian, say 15, 20 years ago, I always said, look, we can't just snap our fingers and go back to the Constitution tomorrow. There's a mess that needs to be unwound here. It's like a big plate of spaghetti, and it has to be unwound one strand at a time. But you have to be committed to unwinding it one strand at a time, right? And then, you know, and if you do that, okay, great. Then we'll get there, and we'll get there eventually, and we'll do as little harm as possible in the process. And that's all I'm doing in arguing the way the Fed is acting now under Powell. Does
So
that make sense?
yeah, no, it makes a ton of sense. But my follow up question there is,
Sure.
it's kind of been, outside of, I guess the past 2 years, while the Fed has been, Jerome Powell's been raising rates and everything like that. Obviously, the
Right.
U.S. greatest export is the dollar. So
Mhm.
you're talking about kind of moving away and kind of destroying the offshore dollar market. So I kind of
Right.
want to get into that, because
Well, not destroying it, really destroying the leverage within it.
okay,
Like offshore dollars are fine, but they cannot be the thing that they can't be so cheap that they can be levered up with no cost, and then neutering the Federal Reserve, the ability to monitor to not monitor but to manage the money supply, the global supply of dollars, right? And if you don't have a Fed that's willing to break that leverage cycle, if you always have a Federal Reserve that's so scared of breaking anything that they just enable, all of this insane leverage, like all of this wokeism and all of this, dumb ideas proliferate at the zero bound, right? Is there any argument? Is there, correlation doesn't necessarily imply causality or anything, but let's think about, one of the mantras I've always run by, and you and I are talking for the first time here, but longtime readers and followers of my work will always hear the same thing from me: a corrupt money begets a corrupt society. We have a terminally corrupt society. Now we have a terminally corrupt society to the point where we can't even define who's a man, who's a woman anymore. Like, this is how dumb things are, and dumb ideas don't die when money has no cost. Like they're like they're like yeast in a beer wort, for Christ's sake. It just everybody's on a sugar high, and they're farting out CO2 and making alcohol, and everybody's getting drunk and having a great time. But how do you extricate yourself? Well, you're going to go through some pain now. There's going to be a hangover. It's going to suck. It's not going to be fun, but it's necessary. And putting it off any longer is just like, at this point, they can't put it off any longer, because if you don't, you lose the country, you lose the rule of law, you lose all of faith in all the institutions, and you lose the one thing we do export well, which is the dollar. So getting rid of the leverage is how you get rid of a lot of the aberrant behavior, both in the financial markets and at every other level, because all of a sudden the pricing signals that everybody gets about what their behavior entails and what the cost of that behavior entails, regardless of what they think, what domain you're talking about, be it the casino on Wall Street, the activities on Capitol Hill, the war in Ukraine, or tranny bathrooms. It's all an outgrowth of the same thing: cheap money. Get rid of cheap money, and all of a sudden everybody's got to oh, guess we don't have time to worry about these things anymore, about whether or not words are microaggressions, because there are ditches to be dug, and there's electricity lines that need to be run, and and that's reality. And so we've had this false sense of abundance, this false sense of having um, uh, conquered scarcity that only comes with the mania of 15 years of zero bound dollars. And that's ending. And I think Powell's been very clear as to why he's doing this. And it's not to tame inflation. That's the cover story. If you listen carefully to what Powell's talking about, he's talking about bringing risk assessment, bringing proper risk assessment back into the market, the proper pricing of risk. And it should be the function of the private banking system, of the commercial banking system, and not of the central bank and not of the government. And that's where all the wailing and gnashing of teeth are coming from.
So on that point, it seems like obviously, the Fed kind of raising rates at a historic rate this time around, has gotten a lot of headlines, right? They've been doing the 75 basis point hikes and kind of continually doing that up until the last meeting where, they went back to 25. So, do you think that they're going to kind of maybe revert back to that continual like I guess fast pace of things as the economy has, Powell's kind of pointed to unemployment still kind of staying strong and some
Yeah,
other things, and obviously, it's not all about inflation, but they are talking a little bit about the CPI number, and that is still,
sure.
somewhat elevated. So, I guess in your opinion, do you think that they've kind of tried to, I guess, shock the system in a sense by doing it so quickly and raising rates at such a historic pace that maybe now that they're either one gonna kind of go back to that and get back to the 50 basis point hikes, or they're gonna kind of take the foot off the pedal a little bit and just kind of do these continual 25 basis point hikes. Like, I guess, how do you see it all playing out?
I think it all depends on the reaction to the market. The market continues to act the way it's been acting, which is to say, oh, you're going to pivot. We don't believe you. At some point, the economic data is going to force Powell's hand to slap it down again. But here's the thing, and I can see Powell going either way here. It's just allowing, we're in a phase right now where they've slowed down on the big rate hikes, the 75s, the 50, and now tapered down to 25. Market is signaling probably 25 in 2 weeks. I'm mostly expecting 25 in 2 weeks. It's interesting that the Fed funds futures curve today radically shifted. That now all of a sudden, there's a 50 basis point hike in either March or May now, right? If you looked at the Fed funds futures curve expectations today, it was a huge shift. As of yesterday, it was like 75, 25. And excuse my I have a crazy dog, and I'm out on my porch smoking a cigar, so it is what it is. The I can see them going. I think you take them at their word that they're going to be data driven about this. As long as the economic data is strong enough, but the markets refuse to accept the fact that this has got to improve, that the market's perception of what the Fed's willing to do doesn't improve, i.e., there's not if a great number of people continue to be in denial. If you think of the death of the Fed put as something to grieve over, and we use the Kubler-Ross 5 stages of grief, 50% of the market is still in denial because of the inversion on the Fed funds futures curve, the SOFR futures curve, and the Eurodollar futures curve. And that sometime this year, the Fed's going to pivot, and it's still there in the curve, in the yield inversions. Now, those yield inversions are getting pushed farther out in time. A month ago they were at June, right? Now it's the Fed funds futures is like flat to December. Like it's up to, it goes out to June, and it's kind of mostly flat around the June, September, December quarterly contracts. So I think the market's perception of this is shifting, the opinion is shifting. And as long as the data keeps confirming that Powell's correct, that the economy is not about to collapse tomorrow, I think more people are convinced that maybe Powell's done it right here. Moreover, and this is something that's just popped into my head, and I think we'll get into that in a little bit, but I want to point out that there's another big shift happening soon, the next few days, which is the changeover in the leadership of the Bank of Japan. And I was thinking about this afternoon, and I haven't fully put it all together yet, and I haven't even presented this information to my thoughts on this to my patrons or anybody else. I threw a quick note out on our private discussion forum this afternoon about this, but I think that there's something happening with the Bank of Japan that will alleviate this massive 210 inversion that we have on the U.S. yield curve. So, but I don't know. I could see 25 in March. I can see 50 basis points in May. I'm on record as saying I think the Fed's going to do 425s and 450s this year. I thought they were going to do 450s and then 425s, go to a terminal rate of 7 by December. The way they get there could be different. It could be a couple of 25s and a couple of 50s, and then a couple of 25s when we end up at 6.5% by the end of the year. That's possible. I don't know. We'll see.
All right, yeah. So before we got some questions coming up, but before we do that, I want to go into the article you wrote that was published on Zero Hedge on Monday
Sure.
about the war for the dollar, how it's already over, and how you believe
Mm-hmm.
the Fed has already won.
Yes.
I guess, yeah, I'll just leave it broad so you can kind of go into it from there. Yeah.
So over the last couple of weeks, I've done 3 podcasts with some pretty, some pretty impressive people. People that I'm impressed with, and at point stage of the game, to be honest with you, I'm not impressed with very, very many people in the financial commentariat. So Daniel DiMartino, Booth, Lynette Zhang, and Vince Lanci of BB. You guys know him as VBL. And in each one of the podcasts I did with them, I took a slightly different tact on to kind of go over where we are in this thing. I had a very self-serving plan. I wanted to pick their brains about these 3 different things, about 3 different areas of this. And the first one was to talk with Danielle Booth about, the structure of the Fed, who Powell is, and lead her to the idea that, could I be right about this, right? Or is this just coincidence, kind of mutual coincidence of wants, and correlation doesn't necessarily imply causality and all that kind of stuff. No, Powell's just a bureaucrat and doing what he needs to do. And I went through that, and I said, okay, well, what I want to do now is I want to really put together a series of blog posts kind of going over all this stuff. But when I got a note from one of my patrons saying, oh, by the way, I saw this on my broker announcement this morning, reminding everybody, oh, by the way, the CME, the Chicago Mercantile Exchange, is ending the trading of Eurodollar futures on April 14th. And the last contract that will trade will be June of 2023, which is, of course, the one that closes on June 30th, which is the same day that LIBOR is completely phased out of, for all intents and purposes, U.S. markets in every way. Everybody has to be out of LIBOR by June 30th, right? And all their debt has to be re-indexed to SOFR. You've had enough time to rewrite the contracts and then roll over the positions and everything else. And that the Eurodollar futures contracts from going forward in the next couple of days the only transactions will be closing transactions. This is a dead market. And it's a dead market because SOFR won. Because as of December 2021, SOFR futures were about 37. I think I quoted in the article. I read a press release of like 37% of Eurodollar futures trading volume on a daily basis. On January of 2022, all new debt in the United States has to be indexed to SOFR. So anything issued, so if you got a new credit card or you got a new mortgage or a car loan or whatever, it's all indexed to SOFR. Okay, not indexed to LIBOR anymore. That was as of January 1st, 2022. By the end of January, the CME is putting out press releases saying, look, our SOFR futures contract is so successful, it is now trading at like 300% of daily volume of Eurodollar futures market, Eurodollar futures. Look at this major shift or whatever, in this like a month. So this is what I put in the article the other day, trying to make the argument that this is what's happening. And then they've been publishing, and I didn't even realize this. They publish on a daily basis the growth of the LIBOR versus SOFR futures trading volume. You can go on the CME, you can look at it every day. They daily report on this, and no lie, as of February 2023, SOFR futures are trading at 1,000%, so 10 times the open daily volume and open interest to the Eurodollar futures contract. So guess what? The Eurodollar futures contract is a dead market. The CME didn't, and they announced that they would be ending this in October, but slowly but surely, these things were already in place. By the time they made the announcement in October, SOFR volume was already 5 or 6 times Eurodollar futures. So it was clearly a market that was on its way out. And all that's telling you is that that's prima facie evidence that this was the Fed's goal all along, that SOFR was to replace LIBOR, which is what the Eurodollar futures market takes its cues from, that was always the goal. And so there it is. And then you watched it in black and white. So I'm actually working on part 2 of that series. I was working on it today. I'm not going to get it done until probably Thursday afternoon at the earliest, maybe even Friday morning. because this is a lot to go over here. But one of the things I talked about with Vince Lanci on my podcast, it's episode 135 of my podcast, Gold Coats and Guns. Vince wanted to talk to me about this idea of how markets get changed over from how do you go from where you are to where you want to go and do so with as little damage as possible, right? Well, you do so in stages. And I had originally put this idea in Vince's head when he and I did a Twitter Spaces together back for Palisades Gold Radio back in, I think, October or November. And I said, well, if we ever want to get out of, if we want to recapitalize the United States, we just go with Judy Shelton's idea of 50 to 100-year bonds with a 5% gold redemption clause. And what that would do, and the minute I said that, Vince was like, oh my God, you're absolutely right. We just throw gold out on the yield curve. And all of a sudden it's now you're effectively remonetizing it, but you're doing so in a way that's very gentle and it's stepwise. And it's kind of like the SOFR rollout. It took 5 years. They put a 5-year plan in place to replace LIBOR with SOFR. They didn't just put it out there overnight because that would have caused havoc. That would have dogs and cats living together, mass hysteria, Mad Max world, the whole 9 yards, right? I mean, if that was their goal to shock the system into that, then they would have done it the way they would have done it the way the WEF and Davos ran the COVID scam on us all. Okay? Shock and awe. But they didn't. So it's clearly, so what I'm saying now is, so in the article you're talking about that I was on Zero Hedge was just to say, oh, by the way, I've sandbagged you. Here's all this verbiage about, where we've been and where we're going. Oh, but by the way, the war was already won back in October when the CME announced that they were Eurodollar futures. And here's the proof. And then I went into the volume statistics on all this. But that doesn't mean that's the end of the story, okay? Because that's just looking at this one area of the market. There's a much bigger story at play here. There's the future of global financial system itself. Is it going to be multipolar? Is it, what's the death of the petrodollar? What's the death what's going to happen with all the de-dollarizations happening in Asia, which is another reason why the Fed can't pivot. Because when you widen your vision beyond the CPI and all the safe and massaged government numbers that a lot of financial commentators like to play in, because that's the space in which they're supposedly experts. I'm not saying that they're not experts in those numbers. I'm actually saying that the idea of them being experts because of those numbers, but those numbers are all they're not good data. I'm a data guy, right? I'm a former scientist. I'm a former chemist. Like if you become an expert in reading the tea leaves on bad data, I got news for you. You're not an expert in much. You're an expert in describing a false reality. Okay, you're not an expert in describing reality. You've gotten lost in a false reality of false numbers, of a false hypothesis about how the markets actually work. So that's why the geopolitics is so damn important. It's why you can't just look at one specific area of the markets and then think you know everything, because you don't. And I don't know. And believe me, I'm not sitting here from in my throne going, oh, you guys are all morons. Like, no, I don't know anything either. I'm just doing my best to try and keep my vision as broad as possible and to understand the incentives of the people in play and the stated goals of the people who are trying to frog march us into tyranny. And that's very clear. And then what would they do? And then if you didn't want to be frog marched into it, and they're targeting the commercial banks in the U.S., the Wall Street banks, and they're going to frog march them into tyranny or subservience, or worse, just cut them out completely. Do you think that those guys are going to take those lying down? Is that air you think you're breathing? Like, seriously? I don't see that happening. I see the biggest fight that we've seen in 350, the biggest war that's going on right now in the last 350 years since the formation of the Bank of England. It's happening right now. And it's happening between the New York banks and their advocate, the Federal Reserve, and the old European colonial money, who thought that, hey, we can use these We can just make the Fed our bitch, and then we'll lever up the dollars. We'll control the dollars, and we'll control the cost of those dollars. And when we get in trouble, we can jack LIBOR to the gills, and we can control the United States that way. That's the way they ran policy in the United States post Bretton Woods, and they run it. And Wall Street was complicit in this up until about 15 years ago, I think. And then once they saw their opportunity, or maybe 6 years ago, once they saw their opportunity with Trump to implement what needs to be implemented. Because remember, SOFR was on the table back in 2008, but Obama squashed it. And it was only with the election of Trump that the opportunity rose to actually finally implement it. And then that's why we're where we are today. Because Powell was not anybody's first choice. The wailing and gnashing of teeth by the Financial Times, The Economist, the Wall Street Journal, the New York Times about John Williams being appointed to the New York Fed, who is, by the way, the architect of SOFR, was legendary. Go back and read the things, the horrible things they said about John Williams back in 2017 when he was appointed to the New York Fed. It's clear as day whose book was being talked back then. But I wasn't even aware of any of this stuff back then. I wasn't even thinking about this stuff. I was kind of typical, post Ron Paul, Austro-libertarian, go, Fed sucks, end it. They never get anything right. And frankly, I think I was 3 years behind the curve on this. I should have saw this back in 2018, 2019. I didn't. So.
Well, I mean, it's interesting you bring that up because, in 2018, 19, I mean, maybe some of the newer people who got into the market don't really have this perception, but, the Fed tried to raise rates during the time, and then they quickly kind of pulled back. So I feel like that might be kind of where, a lot of people who see the pivot are maybe going to or pointing towards because,
Sure.
at that time, the market was ripping and roaring for quite some time. And then, obviously Powell raised rates, the market kind of stagnated a little bit. So, with that kind of in mind, I guess, with Powell's kind of how he's been and kind of pedal to the metal with all of this, as the market has been kind of stagnant and it looks pretty much like a bleak future. Why do you think this time around he's going to kind of continue the way he's going and not maybe focus
Sure.
too much on that market?
Yeah. And it's all about the fact that SOFR was still in a pilot project phase back then. He didn't have there's two things here. One, JP Morgan, Chase, I've gone over this many times, and I don't know if you remember this or not. And I can never find, and Zero Hedge's search function is so bad that I cannot even think to find all the articles that they wrote about. Why was JP Morgan trying to blow up the Treasury market back in early 2019? But you remember that the Powell raised rates in December 2018 and then cut rates 37 days later at the January meeting, right? The late January meeting. 45 days later, because the ECB also had to pivot, right? And so the market then is not the market today, right? Because today, SOFR is a different system. SOFR changes everything. And what was happening in 2019 was that JP Morgan was the first U.S. bank to say, look, this is insane. We are refusing to take as collateral European sovereign debt, trading at negative 1%. We're not taking it at par. You want to trade it to us? I don't even know if they made this offer, but I'm sure they did. You want to trade that to us? We'll give you 70 cents on the dollar. Otherwise, go somewhere else. And they did. And other U.S. banks gave them, allowed the European banks to go in to get dollars at, whatever, and for back then. But eventually it caused a crisis in the repo markets, right? It caused a crisis because eventually there just wasn't enough dollars, and Europe needed them badly. So that caused, the SOFR crisis of September 2019. The Fed stepped in, stabilized the markets, and did what they're supposed to do. which is come in and provide short-term liquidity in the form of, repos or whatever they needed, whatever the market needed, in order to get people through their funding crisis. But similar to September 2007, when the first rumblings with Bear Stearns occurred, I remember reading some really good commentary on this. I can't remember who I was reading, but said, look, this is reminding me. It might have even been Martin Armstrong. Said, look, this is very similar. It wasn't Armstrong. It was somebody else. And I cannot for the life of me remember who, so forgive me. But it's reminding me of 2007. It might have been Jeff Snyder, actually, over at Alhambra Partners, now that I think about it. And he said, look, and, the Fed stepped in then and provided temporary safe haven. And that creates about a halo effect of about 6 months if the Fed's still on the job. Fair enough. And then by March 2008, Bear Stearns gets into real trouble. The crisis reemerges because we haven't actually solved anything. All we did was paper over the problem, right? Well, I remember writing a couple of things about this and saying, look, well, that makes sense. And if they didn't change anything, if they didn't fix anything between September of 2019, then by March of 2020, there's probably going to be another financial crisis, right? Well, we got one. They just called it COVID, right? Because let me ask you a simple question. Do you really think that because Vladimir Putin and Saudi Arabia refused to cut or refused to increase oil output from OPEC Plus by a couple 100,000 barrels, or they raised by 500,000 barrels or whatever it was, that was enough to halve the price of oil overnight from $80 a barrel to $40 a barrel, from Friday afternoon close at 5 o'clock to opening the next Monday at half the price? Does anybody really think that that's the way the market was that unbalanced, and that was such a momentous event? At the time, I thought it was, but I was actually dumb. That was being run in order to induce a financial crisis that was incipient for somebody else. And who that somebody else was? Clearly, it was the ECB. Clearly, it was the European markets were the ones that were in trouble. And so this was a means by which to run the operation, to get rid of Trump, force him, or at least to force Powell, who was not going to give the market what they wanted, because Powell was going to start raising rates again. He's making noise about it. So how do you stop that? Well, you get the idiot Trump to, sign the CARES Act at the point of a gun, which is his reelection. That forces Powell to stay at the zero bound, go back to the zero bound. He complains about this bitterly, by the way. I don't know if anybody remembers that either. Powell wasn't happy about the CARES Act. He's like, nobody talked to me about this. I'm only the Fed chair. It's ridiculous. So, it clearly something was going on here, and somebody was in serious trouble, and the Fed was ready to not bail them out. And then Martin Armstrong let slip, and I think in a private blog post at one point, he said, look, today it started with JP Morgan not refusing to repo European sovereign debt. Today, there isn't an American bank that will. And that was sometime in 2020, late 2020 or early 2021. Because by then, it was very clear what the project was, which was to roll everything over, introduce MMT, put Lael Brainerd in charge of the Federal Reserve, go full MMT retard, and destroy the commercial banking system in the United States and the world, and do away with the private formation of capital through commercial banks, and the two-tiered monetary transmission system. And by that point, all the New York boys finally realized, oh, that's what we're fighting. And I think only some of them really understood this. I think some of them are still, fighting, Europe's fight for them. I think Bank of New York Mellon and BOFA are absolutely on their team. They're playing for the other side. Anybody still saying, yeah, we're going to do ESG, those are clearly Davos trolls. Those are clearly captured pawns here on the side of the fence. But like the Morgans and, the Goldman Sachs, Citigroup. No way, dude. No way. They're telling you They're telling you that's what the fight is. So, that's what I see, and that's the way I see it. And it's hard for me to see these men any other way at this point. And then, you create the background for the political pressure that allows people like Joe Manchin and Kyrsten Sinema to stand up to, major pieces of legislation and unbelievable amounts of lobbying and pressure. And they only do that if somebody very powerful is standing behind them. Otherwise, they always cave. And so this time, and who's bigger than, who's bigger than Davos and all that entails? The New York banks. That's it. That's it. Nobody else on the planet is that strong.
All right. Well, awesome stuff. But we're going to have some people come up for questions now and kind of go through that. Nasha came up and requested the mic. I know we got Phil and Deer Point up here as well. So I'll let Nasha go and then Phil, then Deer Point. So Nasha, welcome to the stage, man. What do you got for us?
Hey, Green, thanks. Tom, I've heard you talk about this before, the U.S. faction fighting Davos. I've always been in the camp that these are the same people. They're their national bankers. So my question to you is, what kind of actions would Powell need to take for you to reconsider the idea that Powell's fighting for us and he's not part of the Davos crowd, as you put it?
What he would have to do at this point is repudiate everything that he's done so far. He'd have to go back to the zero bound at the first sign of trouble. And he would have to literally agree with Christine Lagarde about something, which he hasn't. Christine Lagarde is the mouthpiece for Davos at a policy level. Listen to Christine Lagarde very carefully, and you'll hear exactly what they want you to hear. I don't care if it's Klaus. I don't care if you believe that Davos is, if Klaus Schwab is only a lieutenant or a general, that's fine. That there's, and there's somebody behind him. I go along with that. But I'm going to use Klaus as the metaphor, right, for whatever faction he represents. Schwab put Lagarde in place at first the IMF and then the ECB. He put Mario Draghi in charge of the ECB first. Then he placed him in charge of Italy. Okay. They placed Janet Yellen in the Treasury Department under Biden. These are all people that I think, are clearly controlled. Same thing with Georgieva over at the IMF now. Clearly, Ursula von der Leyen at the European Commission. And Powell and Lagarde don't agree about anything. She keeps talking, she keeps strenuously arguing that we need to, flood the world with liquidity to fight climate change. And Powell's like, no. Really suck what? No, Christine, I have a dual mandate. It's full employment and stable prices, and I work for the American people. And even Booth, when I mentioned this stuff I was trying to lead Daniel DiMartino Booth to this in the podcast I did, and she came back. She said, "Who complained the most about the first 75 basis point rate hike? You can't deploy rate hikes of unusual size." RTO OUSs, right? It was Christine Lagarde and all the people that they speak for. And our financial press works for these people. The Economist, the Financial Times, the Guardian, the Wall Street Journal, all of them. They all work for these people. They're all in cahoots on this. Sure, that asshole Paul Krugman. Like, the fact that guy has a Nobel Prize in economics does violence to the word economics because he's a moron. But, he's a compliant moron. So, whatever. I mean, what would Powell have to do? Literally start agreeing with Christine Lagarde. And I don't see that happening. As a matter of fact, he antagonizes her every time he moves. Every time he makes a move, she has to make a move she doesn't want to make. I mean, if it's a chess match between Powell and Lagarde, like, dude, like, Lagarde's down to a couple of pawns and her king, and Powell's sitting there with 15 pieces left. This fight's over. It's done. She's already cried uncle 3 times.
Yeah, great, great response there, Tom. Phil, you're up next. Welcome, man.
What's up, guys? Tom, what's up, brother? Good to see you.
As always, thank you, Phil. How you been, man?
I'm chilling, man. Nostra. So a couple things really exemplify this division. The Green Swan Conference of summer 2021, which was not coincidentally, I think the week or just before Powell raised the reverse repo by 5 basis points. I think it's about 20 minutes in, maybe it's 40 minutes. I don't know. But watch the whole thing. You can really see Jerome Powell basically saying, no, I have a dual mandate. We're not making this about climate change. And you can see the body language of Christine Lagarde. Like, she gets very standoffish and pissy. So they are not.
She was not expecting that, Phil.
Yeah, it was amazing. I loved it. And then one other thing, Tom may have alluded to this. I'm not sure, but he always rants and has written extensively about this. That Christine Lagarde is having to react to U.S. monetary policy, and she can't defend both the euro and the credit spreads. And if you watch Tom's market reports as a patron, we've been kind of going over this very thoroughly every time those credit spread movements do make movements, but the markets are completely mispriced. Like, there's no way that European debt should be trading at a premium. And you need to ask yourself, yes, you need to ask yourself, why are these markets this way? So that's just a good starting point for you. And then, Tom, before we kind of move on to anything else, I think a place to really lay the ground and put the nail in the coffin of what exactly happened and what did this cause the markets to do when Powell raised the reverse repo rate of June 2021.
Oh, okay. Yeah, and just to catch everybody up, if you guys haven't been following this. So again, previous to this happening, I was pretty much, you could have heard me, I could have been a guy asking the same question of me back in like June 15th, 2021, saying, oh, Powell's just like all the rest of them. They're all just a bunch of globalists. They all suck, blah, blah, blah. And then that happened. And I remember this clearly. Remember, I'm also constantly watching geopolitics at the same time. So that day was also the same day that Biden met with Putin in Geneva. Those two things happened on the same day. And World War III was put on hold for a few months at that summit because Washington was not prepared. Well, Ukraine was not prepared for a Russian invasion in June of 2021. So Biden had to do what the U.S. always does when their proxies aren't prepared. They called for a ceasefire and to buy more time. Now that happened that day. When Powell raised the reverse repo rate, I'll never forget this. I mean, I'll go to the grave with this one. Reading the Zero Hedge, report of the FOMC statement. By the way, I rarely actually watch the Powell presser afterwards, and I don't go over the FOMC statement with a fine-tooth cattle prod. I don't do any of that stuff. I usually just read a summary report, and if something pops out policy-wise that's interesting, I go, oh. And so the Zero Hedge article is really simple. Powell does nothing. FOMC is a big nothing burger, except for they raised this one little technical rate, the reverse repo rate, by 5 basis points. At that point, I didn't even know what the hell a reverse repo was. Okay? But all I know is that because I watch like 7 or 8 very strategic markets on a daily basis, and I have been a euro bear structurally for a decade. I watched the euro, which has been trading against in a countercyclical bull market at $1.22, collapse to $1.19 between that announcement and the Friday close. Now, I'm enough of a market guy. I watch things from when the market speaks like that, currency markets speak like that, I listen. And if it's discontinuous to my previously held beliefs, I update my beliefs. Like, I'm a big Randian in that respect. You check your premises. If something happens that you don't understand why it happened, with the violence that it happened, you got to go, oh, wow, that was not a reaction I expected. Again, former chemist, I've done this before, where you put a hypothesis on the table, you set up an experiment, and you get data that is completely off off of where you thought you were. And you're like, I guess my hypothesis was wrong, right? So at that moment is when I said, okay, so what's going on here? And it's that kind of, it's like, that moment you have one of those moments where all of a sudden, all these little things that you'd heard over the last, I don't know, year or so, just all of a sudden clicked into place. Klaus Schwab is trying to end commercial banking. Martin Armstrong's been banging the shoe on the table about this. This is going on. That's going on. Blah, blah. Powell, I remember not a week earlier, I think if you remember, I said in either, on our private server, chat server, or in a market report, I said, I might have even been on my Twitter feed, to be honest with you. This is the most important news item of the week, is when Powell, dressed down Lagarde at the Green
Swan.
Green Swan Summit, right? I can never remember the name of this thing. I remember saying to somebody, either in public on my Twitter feed or to the community, this is the most important event of the week, or the important headline of the week. Nothing else matters. And there's all this stuff going on. We have practically World War III breaking out in Ukraine, for Christ's sake. And I'm like, no, that's more important than everything else. Because that was the moment when Powell was saying, look, I'm going to defend the dollar, Christine. And there's nothing you can do about it. I didn't know what it was going to look like. I didn't know what he was going to do, or why. I just knew he was going to do so. I knew why he was going to do it. I didn't know what he was going to do. And it's at that point that you sit down and you do a little soul searching. And I remember going through this when I first accepted Martin Armstrong's arguments about the dollar eventually having to strengthen. I used to be a massive dollar bear, a typical gold bug back in, say, 2015. And I remember sitting there doing some serious soul searching while I was writing for Newsmax at the time, because all my recommendations were going in the wrong direction, and I could not understand what was happening in the gold markets. And clearly, my premises were wrong. So, you do this, and you show a little humility, and then you really start thinking about things. And then you just watch the markets, and you say, okay, if he does that, what's the net effect of this? The Biden administration was getting ready to spend $1.7 trillion that the treasury market had raised under Trump, and they were getting ready to loose unbelievable amounts of liquidity onto the world. We were all still shell-shocked over COVID. There was all this talk about deflation, and we needed more spending, and I knew that was bad, blah, 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 blah. And I sat down and I thought about it for a couple minutes, and I'm like, could it be that this is the moment when the Fed finally stands up and says, I don't want to be the central bank of the world anymore? And then I put it to our community, the Gold Goats and Guns. We have a private server for anybody in the community if they want to hang out and chat. We have a private server for this. And at the time, we had a couple of people in there who were, pretty, big hedge fund managers, and, people who knew those in, at play here, right? And I said, could this be what's going on? Correct me if I'm wrong, but this is what I'm beginning to see. And the response to me was very simple. It was very short and very brief. And I know when this particular person spoke, and didn't speak often, and when he spoke, he usually spoke in one sentence responses. They don't call him Private Equity Powell for nothing. I'm like, okay, I'm going to run with this. Now let's put it all together and see what it means. And then let's put together a hypothesis about what's going on. And kind of classic, I'm a freaking physical chemist. Let's put a hypothesis, let's put an experiment together, let's put it up on the board, let's do a thought experiment, and then let's run it out. And then let's see if the data continues to fit. Let's see if we see the behavior of the people that we're talking about fit the model. It's fit within R squared of like 99, of like 0.99 for the last 2 years.
Long
Hard for me
story
to argue with.
Yeah. Well, long story short, it drained over $1 trillion of base dollar liquidity, which was the first step.
That was the first step. And when you think about what that meant, it meant, and here's the thing. I think I went over this at one point, Phil. Correct me if I'm wrong, but I did a mass balance of the liquidity. The Treasury spent like 1.4, 1.3 of trillion of that 1.7 over the next few months. The reverse repo facility went from $458 billion to over $2 trillion Jackson Hole. And I think the net number that was pulled out of offshore dollar markets. And remember, this would be base money, folks. This is not credit money. This is base money. This is global M0. It was over $700 billion. So now you have to start thinking in terms of, well, if there's anywhere from a 5 to 10 X leverage ratio on that money, that's like pulling $7 trillion or $8 trillion in credit out of the markets globally. Do you think that would have a little bit of an effect?
Yeah, it was basically the Fed reacting to the forced stimulus that COVID forced on them.
Yeah.
All
And
right,
so,
Deer Point's jumping out.
Yeah, that's fine. The only thing I'm going to say from there is that was the beginning of the bear market in the euro, from $1.22 down to 95 cents.
Yeah, awesome stuff. Awesome back and forth. But yeah, Deer Point, you've been waiting patiently, so I appreciate it. And go for it, man.
Yeah, just maybe like a couple of things here. So, like, I guess my first question is, like, how does a higher, because you were saying that essentially Eurodollars have been cheap, but I know I sent this to David. David has this graph somewhere. They haven't. And like this gets into I don't want to bore people here with complexities. But like so when you measure dollar funding components, right? You take the implied rate minus dollar LIBOR. Now it would be the SOFR rate, so let's say plus 25, right? Plus or minus 25. But what you've seen is ever since 2008 or 2000, actually, essentially after the great financial crisis, within dollar funding markets, there's been a deviation in covered interest rate parity. So dollar funding has actually, over the last 14 years, been more expensive than it was prior to '08. So I'm not sure where this cheap dollar leverage is coming from, because anybody who's dealt in cross currency basis swap markets or FX swap markets, like that deviation has meant that dollars have actually become more expensive, not cheaper. So I'm not sure where the cheapness is coming from. That was kind of my question.
Well, I'm simply thinking in terms of the actual. Look, if the Fed funds rate is 0%, that money's being and the treasuries that are coming out at the treasury is able to issue capital at 0%. That money clearly is flown around the world because it produced a situation where we wound up with everybody going to the zero bound. Now, I understand what you're saying. Remember, this is an area where I'm still a novice. Okay, I'm not. I don't trade interest rate swaps or anything along those lines. I've never done anything like that. I'm just looking at this from the perspective of when you make money, when you make the actual money itself cheap, and you give the treasury the ability to spend at the zero bound, and you allow the markets to come in or anybody to come in and buy treasuries at effectively, no yield, at no cost. It drives global interest rates down to, and it allows for all sorts of, it allows the ECB to run yield curve control for this amount of time. I personally, since 2008, I really do believe that the central banks were coordinating monetary policy for, and it was a kind of a round. They would do. I always looked at it as round robin QE. First, it was the Fed's turn, then they would stop, doing QE for a while, and then the ECB would pick it up, and then the POJ would pick it up, and the S&B would pick it up, and then everybody else would kind of back off, and a little bit, and it would just keep going around and around, and we just kept, creating all of this, this big pile. And in a sense, I think you're right that this money is all sitting out there, and it's what do you call them? And it may be expensive on a basis, swap basis perspective, but it's still zero cost money. We're still allowing the ECB to print euros at negative yields and to send bond prices to way above to not accurately assess real risk in the real markets. Like, of the investments that are being made with this money, and if any investments are being made at all, and it's really just all it did was seize investment forever, and it drove money out of money markets because who's going to put their money in a money market at 5 basis points, right? Yeah, it may be 5 basis points may be better than a disinflationary deflationary rate, say within the eurozone of negative 0.5% or negative 1%, but it's still because it's still driving this scenario where if you need access to new capital, you can go get it for nothing. The actual money itself is, and then how it's hedged and how it's laid off is a different issue. So I don't know. I mean, again, this is where I'm also looking for help to understand what's going on here. Okay, but this is in the grand scheme of things. When you pull back, you say, look, for 15 years we've been at the zero bound. That's going to have a distortive effect on everything, on the price of everything. And if dollars are so expensive, then why are the real estate markets where they are? Why is all of this happening? And who gets to spend all that money, and who gets to take it and lever it up? And then worse, how does BlackRock, sell all these collateralized loan obligations, these CLOs, which are clearly leveraged to the hilt? Like this is which apparently blew up the British pension system, which personally I think it was a bit of blackmail on BlackRock's part, but in order to execute a coup against a prime minister in the Bank of England. But that's just me. That's the way I saw that. I'm not trying to gallop around this. To your point, I'm trying to see it.
No,
What I mean?
it's fine, because I've had this conversation with Phil, and I'm kind of on the other side of this, in the sense, like, I think the issue is there's not enough dollars, and kind of the way that you could look at that, for example, and Tom, I don't mind sending you some stuff as well. Like, I've had to lock my account for, and we'll talk about that in the DMs if you want, of why, but I have higher ups that I have to answer to, right? So
fair enough.
But the those kinds of things, like, if you look at nations selling treasuries, let's use Japan. I think that the reason that this is happening is because there is not actually enough dollar collateral in the global financial system. And therefore, when you sell treasuries, you get back dollars, right? Just to keep things very basic.
Right.
And so therefore, all of this selling of treasuries, whether you look at nations like Saudi Arabia, or you look at nations like even China or Japan, the EU, Canada, all of these nations who have been selling treasuries, like if you look at the year-over-year change in that, or even if you want to look at the nominal number, you do see a dip, even though on the nominal basis it's negligible, because you're talking, large sums of money at this point. But like, what I mean is, when you see that dip, like, what I see that as is that there is not enough offshore dollar funding to essentially keep liquidity in capital markets, and therefore all of these nations are having to sell treasuries, one, to try to defend their currency, but two, so that they have enough access to dollars. And so, like, that's kind of where I've been on this idea of where, like, that was my whole, because I was in the Fed pivot camp, but not because of great economic data, but kind of, as you've touched on, the fact that the Fed has taken on the responsibility to control, monetary policy for the entire world. And this lack of liquidity and the massive implications that has, right? And so that's kind of
Mhm.
where I'm coming from, where I think, hey, countries are suffering from a liquidity crisis, and the only person who can fill that's the United States, right?
Right. No, I understand that, and I don't know that that's been that's well, yeah, and I think it gets down to how much of this is. I'm not disagreeing with you that liquidity has been tight because there's no place to, no one will take the money and do anything with it, right? It's all stuffed onto central bank balance sheets through QE in various forms. It's all it's stuffed into. Um, the reverse repo facility, for example, and other things like that, right? It's the so when you, but that's what Bernanke did. He he printed all these dollars, right? But they didn't let them circulate, right? Just to and again, to kind of keep things very very basic, he paid interest on excess reserves. He paid the banks not to lend, and was going to recapitalize them slowly over time through IOER, right? And then eventually we as the taxpayers and we as the people who were generating what real wealth was being generated was all going to recapitalize all the banks who went bust in 2008, right? And then the central banks since then have just been trying to keep the liquidity from collapsing completely. Okay, I think I fully agree with. Um, the but the 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 thing that I've always said is this, which is, or what I've been saying is this, is that when you think about what LIBOR actually is and who controls LIBOR, right? The Fed is the central bank of the world because they've been trying to provide the liquidity necessary for the rest of the world. But we're seeing, and oh, by the way, just as an important point about the sales of U.S. Treasuries, note if you go through the TIC report over the last year, you'll see something very. I don't know if you've seen this, but I broke the TIC report down by region, and you'll note that if you break it down into kind of Asia Pacific, the Eurozone, and attendance, that would include the Caymans and the Bahamas and all the offshore, all those, and then Belgium for Euroclear and whatnot, and the rest of the world, you'll see very clearly that Asia Pacific's been selling U.S. Treasuries out of their reserves, and the Eurozone's been buying. The Eurozone's been buying them in order to prop up the failing euro. As the euro was getting into serious trouble, the ECB was literally, and various other agencies were buying U.S. Treasuries to keep dollar liquidity tight and to keep the euro from collapsing and to defend the euro. And so, that's the level at which I see these things. I can't really go any farther than that. I don't. This is where the limits of my knowledge are plain to see. Okay, I'm not even going to try and LARP that I know more about this than I do, because I won't do that. But with everybody at the zero bound, it allows governments to spend to make up the difference because there's no liquidity. So the governments are then supposed to spend. This is a Keynesian countercyclical policy, right? There's not enough dollars, and we have deflationary impulses. Then governments are supposed to spend to boost GDP, right? But then what happens with those dollars can't be lent into the market because there's no place to invest them to get any real positive return. So now everybody's just kind of playing around, and worse, what they're doing is they're then leveraging up in secondary markets in order to try and chase yield. And it's part of the big story here is, of course, that most of the West has defined benefit pension systems that are supposed to, produce an 8% yield. How are you going to get 8% yield when everybody's at negative interest rates? And so the only way you do that is through leverage. And that has created the casino effect. That is what I think Powell is trying to break. Okay, I don't know necessarily that he wants to break the offshore dollar markets, as I said earlier. That he really, and when I say it that way, I'm really trying to keep it as simple as possible for even the more layman than I am, is to say, look, it's the leverage within that system which needs to go away, because that leverage, as expressed through LIBOR and any shocks to LIBOR, are what always then translate back to the United States and comes back across the pond and forces our banks to have to raise interest rates, which crushes our economy and then forces the Fed to pivot. And that's what they've always done in the past. And with Bernanke and Yellen at the helm, they would always do so, either because they were, in Daniel Booth's parlance, shockingly naive about what's going on out there, or because they were complicit in it. You could make an argument either way. And, like it or not, that money has gone to a lot of nefarious ends over the years. And that's why I'm, in effect, that's why I champion all this stuff. It's like, I want this stuff to stop. I want George Soros to stop, toppling governments and rigging elections and all the rest of it, everything else he does. Like, that money circulates in one way or another. And the people who have the most access to it are the ones who, and the ability to lever it up, are the ones who are setting policy for the world. And I just think that the Fed is saying, you know what? No, that's enough of that. We have to stop this, because this is going to destroy everybody. That's, at the kind of 40,000 foot level, that's the way I see it.
And Tom, and to your point, like, to y'all's points to kind of clear this up, to me, the shadow banks can basically charge whatever they want for their money, like in the shadow banking system. Sure. And also, to me, it would make sense that maybe dollars cost more because there are less of them. So, of course, that lender is going to charge more in interest either way. And this all goes back to, why did Powell drain that much base year liquidity out? Was to maybe not destroy the offshore dollar market, but to weaken it when it is indexed to LIBOR, and basically shove in SOFR to replace that, so they can have a offshore dollar index that is indexed to something that's real, a secured rate, which is what SOFR is, right, and basically have their hegemony under a new America First monetary policy in this new merited system.
Or it's not even just that, Phil. I think the other thing is, and this is I haven't really touched on yet, is that it's clear that the rest of the world, that there's a lot of the world that's de-dollarizing, right? And while I don't think we've reached critical mass on that by any stretch of the imagination, the trend is clearly in place, which is all that matters. Because through external policy, which is what I'm writing about now in part 2 of the article series, is that, when you raise the cost of doing business in something to a particular point, eventually, the cost benefit analysis of dealing with that rise in cost versus the cost of absorbing that cost rather than calculating the benefit of getting off of that system and doing something else, reaches an equilibrium point and then reverses, right? So in the article, I've got I've got about half done. Think of it this way, and I was using the petrodollar system as a perfect example of this. Back in 2011 or 2012, December 2012, when Obama cut Iran out of the SWIFT system, it was the first moment where the United States used a financial nuclear weapon to try and bring a foreign power to heel, where they actually did it, as opposed to just threatening to do it like they did with the Swiss in 2010 over privacy issues. Now, in the short term, it was devastating for Iran. But then look at what happened after that. What happened after that is, in order for Iran to survive, they changed their trade policy. They started trading with India goods for oil, or as Bloomberg put it, literally in a headline, junk for oil. And U.S. neoconservatives in every think tank on K Street was crowing about how, literally crowing. I watched multiple interviews about this, crowing about how the Iranians are having to trade, soybeans for their oil, or getting washing machines in return. They're getting junk, not getting dollars. Like, what are you kidding me? They're getting washing machines. They're getting heavy equipment. They're getting farm equipment. They're getting all the things that India produces. And India produces stuff, right? And in Indians got oil in return, and they didn't have to go into the FX markets to go deal with the rupee and convert rupees into dollars to go buy the oil and bring it back in. It completely bypassed their current account. It was a win-win for both of them, right? They went to barter, and it was a win-win for both of them. And it was the beginning of the end of the petrodollar, because now somebody out there was transacting oil in something other than dollars. Hell, supposedly we invaded Iraq and Libya because both Saddam Hussein and Gaddafi were getting ready to only demand gold for their oil. And we invaded their countries over this. But Iran survived it by trading washing machines, soybean oils, mung beans, and all this other stuff. And then eventually Turkey got involved in this. And I don't know if anybody remembers this, but oh, by the way, go back and look at Turkey's central bank gold, their official reserve of their gold holdings. And you'll see that Turkey remonetized as a reserve asset for the commercial banking system in Turkey. Gold was a tier 1 capital asset to them, in complete violation, meaning it traded at par with the dollar. It traded at par. Gold in the Turkish banking system traded, as a tier 1 capital asset. So it wasn't. So it's reserve. It was held at 100% of its current value, mark to market, as a reserve for the bank, as opposed to the 50% haircut that was supposed to take under Basel I or Basel II. What happened to Turkey over the course of the years that Iran was cut out of the banking system, the SWIFT system, until the JCPOA was put in place? Turkey imported like 400 tons of gold. Now, they were taking it as a third party for Iran. And we even tried to, expose Erdogan over this after Russia invaded, or after Russia supported Syria. And then there was the dust up between Turkey and Russia over the shooting down of the Su-25 in November of 2018. And then the aftermath of that, all this stuff about, Erdogan's son was selling Syrian oil, and then we accused them of laundering money for Iran through the banking system by taking gold. This all came out. It was all discussed, and it was done as a means by which to justify the attempted coup against Erdogan in Turkey, which I hope nobody forgets about. So, but Erdogan, remonetized gold to allow his banking system to act as a middleman between Iran, people wanting to buy Iranian oil, and Iran wanting to sell it in violation of U.S. sanctions. These are the death of 1,000 cuts to the petrodollar system. These are the two best examples I can give you from over the last decade, where major things happened that I remember. I'm sure there were others. Today, fast forward to today, now Saudi Arabia is talking about buying, about taking Chinese yuan for it. The Chinese have a very active oil futures contract over in Shanghai. A lot of the world is now trading oil outside of dollars, right? Russia and Iran started a goods for oil program, just like Iran and India did during the first SWIFT expulsion period, 2012 to 2015. Then after Trump repudiated the JCPOA and Iran was cut out again. And all I'm saying here is that when you raise the cost of doing business in dollars, people are then incentivized to seek new solutions. And then once they do, they never go back. So policy matters here.
So I want to jump in here because I've been waiting ages and I've got to go, and it's related to what I want to ask on. So,
Sure.
Yeah, so some interesting points. I spoke with Frank Justra on my podcast a couple of weeks back along similar lines about, the de-dollarization. Now, I get into disagreements with a lot of, I wouldn't even say it's because they're pro-Russia, pro-China. It's more because they just want to back the West. But more about the sort of the feasibility and time scale for an alternative finance to actually happen. I want your personal take on a couple of things, right? Everyone's lauding about the BRIC Plus, and the capacity for there to be an alternative finance model around the country. Apart from the fact that the two countries that have only actually grown based on the predictions of the economists who first pushed BRICS, also have terrible relations with one another. And it often is the case that, security and strategic interests, I think, will impede economic ones. So I'm curious about you think about the feasibility of this system created, but two, also timescale. I'm not denying that I think de-dollarization is happening. The visit to Saudi Arabia by and then in January is significant, probably the biggest factor in all of this. But it's still not going to happen overnight.
No, absolutely not.
I think it's going to be a while for this to get in place. So in the meantime, I also discussed with Frank the idea of CBDCs, and the Chinese are pushing this heavily. So what are your thoughts on a few of those points?
Okay, so I will again. I think one of the things that I didn't get into earlier was what I talked about with Vince Lanci when I had him on the podcast. Because what Vince was talking to me, he was thinking about some of the things that he and I discussed about the remonetization of gold, and he got thinking when he and I first met on that Twitter Spaces we did back in November. I think it was November for Palisades Gold Radio, and I've got a link to it on the podcast page on my website. So if not, it's in the show notes on that podcast, where I introduced, that's the first time I had a chance to ever talk to Vince, and I just threw it out there. Well, we can recapitalize the United States by throwing the Treasury gold down at the yield curve, his words, and it got him thinking for the last 4 or 5 months about this. And so we finally did a podcast about this. And he said, look, you can't switch from one system to the other overnight. Again, like I said earlier, the petrodollar system started breaking down in 2011, right? But that doesn't mean that it's are we close to a tipping point that it's going to break down completely? No, but we are seeing major moves now. It's no longer India and Iran trading a couple $1 billion of goods for oil, right? We're now talking about the potential for the Saudi Arabians to list oil tenders on the Shanghai Futures Exchange. And, getting Chinese and pricing it in Chinese yuan and then hedging their FX risk with gold, which they can do on the Hong Kong. There's two different exchanges that the Chinese have for this. And look, these things are going to happen over time. And as the markets, and again, it's like I was trying to say with the LIBOR versus SOFR, it took how many years of having SOFR in place, having the SOFR futures trade with almost no volume until we started to get to the point where the policy was changing, the contract was established, right? Trust was established in the contract the same way with the trust has been established over the last decade with the Shanghai oil futures contracts, for medium sour oil. You establish trust over time. And then as everybody gets used to, it's, we didn't get invaded by the United States. Our economy didn't collapse. We didn't build up hundreds of billions of dollars in FX reserves in some shitty currency we don't want. Blah, 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 blah. Okay. Hey, the exchange, the Chinese didn't shutter the exchange, at the first sign of trouble, liquidity trouble. Cool. Okay. Eventually, these things, trust is built up in the new system as trust in the old system breaks down. I don't think that any of this stuff is going to happen tomorrow. Martin Armstrong keeps talking about 2032. I think it's a long time between now and 2032. I think the next 5 years are going to be very interesting on this front. I think we're going to be having this conversation about de-dollarization, when I'm collecting Social Security.
Just to build on that then, one of the other things that I think is not being talked about enough, and yes, it's longer term, and yes, people can argue that it may not be, an immediate factor that prevents China from being the economy that it is already, but is China's demographics. Very interesting podcast I listened to the other day from CSIS about China's demographic dividend and generally its deteriorating situation. Now, dependency ratios, overall, just sort of the economic viability of an economy is so dependent on the population. And if you've got a country that has gone through the demographic transition, China, in only 20 years versus France, which is about 110, this puts a huge array of pressure on social services, healthcare, education, and so And the one thing that a lot of people point to is that the West still has a decent immigration. The replacement migration element is going to help offset the lower fertility rate that the West has. China doesn't. Neither does any major autocratic state, for that matter. So, what's your take on China's demographics in the role of not specifically just their growth, but the broader BRICS?
Fair question. I'm going to say, and the first thing I'm going to say is the following. I remember hearing the same thing about Japan 15 years ago. And I remember I was studying with a guy in Vietnam at the time. And guess what we found out? Before Abe came to power and trashed the yen was trading at 75 to the dollar. Talking 2011, 2012, even in 2013. Japan's demographics are terrible, right? Guess what? They just colonized Laos, Vietnam, Cambodia, and they bought a whole bunch of cheap labor. Young, well-educated, cheap labor. Demographic arguments in a global economy, I just think are specious in a lot of ways. I really do. I think they're a kind of single factor, move the slider in Excel to the right. Oh my God, we have a trend. And then we have a some kind of bomb goes off 30 years from now. I've never been convinced by demographic arguments in general. Okay. Just putting it out there. China also has a lot of people. And one of the things that I would caution everybody about is this. Do you think the CCP really cares if China's population is 1.5 billion or 1.1 billion? Do they have the same attitude towards their people that way? I don't know. Maybe, but one of the things. So my point here is, and I understand the question, and I understand the argument. I'm not a huge fan of it because I also know that there's a whole lot of people in Indonesia with good demographics. I also know that there's and the question is going to be, how does China react to that at a policy level towards their neighbors and towards the rest of Central Asia, which, there are plenty of places that have, what's the word I'm looking for? Favorable demographics, Pakistan being one of them, right? That they can effectively colonize. I hate to use that word, but I will for the sake of argument, for simplicity, that they can move that. They can pay for that because that's how Japan did a lot of this, and then Abe destroyed that when he purposefully trashed the yen and picked a fight with the Chinese, which was done at the behest of the CIA to pick a fight over the Senkaku Islands to force a wedge between the Chinese and the Japanese. Because remember, that year that happened, the Chinese and the Japanese were talking about holding each other's debt as reserves. So I don't know. I mean, I'm not a big fan of that because I think that there's, I think the bigger problem for China, honestly, is that as they've gotten richer, they've taken on the standard American diet, that's the worrying part. It's not necessarily the age; it's the health of the population. They're like that I'm more worried about. To be honest with you, I don't know. Sure.
No, I think it's interesting. The well-being element to it is it's not just life expectancy, but life longevity. I think is a different concept I've been into recently. No, I think that's interesting, and I think I take your points about it. Last question then is just about sort of the data element of China, right? Because a lot of the things that we see coming out of China can sometimes be a bit overzealous. There's concerns about their, information they release. And there was a very interesting article written by an academic in the University of Chicago about how autocratic states, but focusing on China, he used satellite imagery to assess the amount of light emission from cities and economic centers around the countries, and came to the correlation, not causation, that autocratic states tend to be less developed and therefore sometimes perhaps exaggerating their actual growth because there's less economic activities, right? So China, based on his, again, pretty crude assessments, but still an interesting take, was that, they've actually lied basically about how large their economy is. And it could be as small as 60%, 40% smaller than they claim it to be. So more about 11 or 12%. So what do you think of that? And just one little question. I had some people mention.
I think that the United States economy is. I think the United States economy is built on financialization. I think we can do that same analysis over here in the United States. This is not a whataboutism. I've been wondering for a long time. The quote unquote value add within the United States economy mostly comes out of the Wall Street, right? So value added GDP, right? As you go up the Russians have a very low, what's the word I'm looking for? Low expansion coefficient, for lack of a better term, right? Because they mostly produce base commodities and, first order, second order, third order goods. They don't produce 9th, 10th, 12th order goods, right? Well, the Chinese are producing a lot of high end goods. They save a lot as a population, and they are encouraged to save in gold. This is one of the things that Vince and I were talking about. Is that the Chinese government is encouraging the Chinese people to save in hard assets. We're not. I think there's a lot of lying going on in all the economic statistics. I think it's been going on for decades everywhere. So I don't believe the numbers coming out of the BLS, right, Bureau of Labor Statistics, any more than I believe China's numbers. I don't believe any of these numbers. I think all these books are cooked to make things, to cast things in the best available light for the political imperatives of the day. We heuristically adjust all sorts of things in the CPI to make it as palatable as possible. Why? Because we have to pay cost of living increases on our entitlement programs, on our pensions, Social Security, Medicare, all these things, based on the CPI, which for most normal people, Martin Armstrong, said, look, if you back out 2022's data, right, and you back out all the stuff that, normal people don't spend money on, the inflation rate in the United States was 32%. Food, energy, housing, the basics, the basics of living, insurance costs, healthcare, and it's only by adding all the other stuff in that you come up with a number that's less than 10%. And he went through a public blog post Marty put out. It was a great post, kind of going through, and with each category he added back in, the inflation rate kept dropping. Well, is that is the CPI a number you can trust? The Fed uses the PCE deflator, the inflation expectations, as a means by which to, guide their monetary policy in order to get back to a quote unquote real positive yield. And we're only just barely into that territory now, 4.75%. And that was enough to push over $500 billion out of the reverse repo facility and back into the money markets. So we actually have money flowing through the money markets in the United States for the first time in 15 years. I don't know. Just the whole idea that I've been thinking about a lot of this stuff in qualitative terms for a while now, and one of the things I take a lot of things very seriously, and I think about the longer term. Capital is going to flow to where capital is treated best. It's just that simple, okay? And if you look at the way things are going, the trends in the West, the trends are very clear. Capital is being treated worse on a day-to-day basis. Every day they're looking for another way to put a windfall profits tax in, or unrealized capital gains tax, or this or that, or whatever it is. They're making oil uninvestable by creating heart-stopping volatility in what should be the most brain-dead, boring market in the world. Right? If you treat capital badly, it's going to flee. And it does not matter what the demographics of the place it's fleeing to are, or any of this other stuff. All that stuff sounds nice, but at the end of the day, capital flows to where it's treated best. And it's what I see is happening in the West, in the East, is that they are putting a foundation in place to slowly, and when they need to flip the switch, they will. And it hangs like the sword of Damocles over the entire Western markets. It's the day they say, okay, well, that's it. We've kind of tokenized gold, and we're going to use it to settle we're going to settle cross-border trade and tokenize gold, between countries. And we're all going to trade in our own individual currencies, and we'll settle up every quarter or every month or whatever in gold. And that system's already mostly in place. Again, Vince and I were talking about this in the podcast literally 2 weeks ago. And if that's what's coming, and that's already here, how is the West going to combat that by trying to stay in a purely fiat environment? It does not matter the demographics at that point. It does not matter. Are we going to argue at this point? We've got a Congress here in the United States that's absolutely committed to keeping people in jail for what effectively is a staged insurrection at the Capitol 2 years ago. Like the breakdown of the rule of law, people, this is real. And we can complain about China as an autocratic system or Russia as an autocratic system, but there are autocrats here going out of their way to destroy the ability to handle capital here in the U.S., and they're clearly doing it in the EU. Like it's on, baby. They're not even thinking twice about anything else other than destroying private formation of capital. So, those are your trends. Those are the trends you care about over the course of the next 10 years. China I think China is very aware of this, and I don't think China wants to be the world's reserve currency. I know they don't want it. Xi has said this as much, and it's like, and there's nothing to parse here. He doesn't want it. He understands it's a terrible burden. And I think that Powell doesn't want it anymore either. And that there's, in his words, room in the world for more than one reserve currency, because at some point we have to get back to transacting good like for like and goods for goods with a proper risk and a proper market rate of risk. And then all the rest of the stuff is really not that important. And at a policy level, we don't shift and turn the battleship around, then, the avalanche has already started, as I said the other day, and it's too late for the pebbles to vote. The capital will flow to China, even if only for 10 years, before it goes somewhere else. And it will leave us in the lurch. And it's not because China's good. It's because they're better. In the great game of global capital, you don't have to be good by any objective measure to attract capital. You just have to be better than everybody else. Everybody could suck, but if you suck 5% less than everybody else, that's where the capital is going to flow.
Some interesting takes. Thank you. I certainly don't agree on the EU front or a few things, but I had a few people ask about my conversation, so I put it in the nest if anyone wants to check it out. Thanks.
Fair enough. Thank you. Appreciate it.
Yep. Great stuff. I believe Nostra was next again. So go for it. And then I think it was wheat and fish.
Yeah, Tom, I liked a lot of what you said most recently, especially about the demographics. I also think it's a specious argument a lot of people bring up, especially when they talk about China, which I find pretty ridiculous considering their population is 4.2 times what the U.S. is.
Yeah, I know. It could collapse. Their population could collapse by 25%, and it's still a massive number of people.
Yeah, every time I bring that up, I've actually brought up they could lose 50%, and people start throwing pejorative terms, and it devolves into nonsense, right? It's no longer a cogent argument. So my question, I want to go back to Powell. I was curious, how did the 2018-2019 Powell pivot? How does that fit into the U.S. faction? Oh crap! Are you okay?
Yeah, I'm fine. I just opened up my refrigerator to get something out of the refrigerator, and a whole bunch of stuff just hit the floor. So I'm fine. So go ahead. I'm sorry. So the Powell
Yeah,
pivot.
Wait, do you
yeah.
still
How does
have
the
a cigar?
Yeah. Of course of course I'm smoking a cigar. What are you kidding me?
Okay, good.
Yeah, how does the Powell pivot fit into the the Powell versus Davos? And just real quickly, because I am no fan of Peter Zeihan. What do you think
Right.
of Peter Zeihan?
Oh, yeah. See, whenever we talk demographics, I was trying to avoid the Peter Zeihan rant, because I think that I'm going to be. I was trying to be nice earlier, and I'll be honest. Like I said before, I think demographic arguments are bad, are specious at best, and they are mostly neocon talking points that come strictly out of the CIA and Stratfor, and that's what I think of Peter Zeihan. Take that for whatever add whatever you want to add to that. I think he's a purposefully. I think he's Kyle Bass 2.0. I think he's an operative. I think he's either he's either just that guy and he actually believes this stuff, or he's purposefully amplified, you know I don't know, opposition, whatever you want to call it. I have no use for him. I mean, he's very good at taking known information and then coming up with really bad takes, really bad conclusions. And whenever somebody takes good information and comes to really bad conclusions, like, you got to ask yourself, how did you do that, and retain any amount of and retain a straight face with an intellectual honesty. Like, I don't see it. I have no respect for the guy. So how's that?
That's great. And the Powell pivot.
The Powell pivot. Again, I think that back in 2018, 2019, I think that it comes back to the markets we were not ready, and SOFR wasn't ready, and there wasn't enough liquidity in the system. I think actually there's a couple of ways of looking at this, and I go back and forth. Again, sometimes I put stuff out there and I talk. I want to just be clear about this. All of my views on some of these, not all of my views, a lot of my views on this stuff are subject to change, because again, and we should all be flexible in our thinking on this stuff, because we are all working with imperfect information and conjecture, right? So there's a number of ways to read what happened in late 2018, early 2019. If SOFR wasn't ready yet and Europe got into serious trouble, and we did have a serious problem in early 2019. That's why Draghi and Powell both, in consecutive days, had to pivot together. Remember, the ECB pivoted first, and then the Powell had to go along with him. It was clearly, it's evidence that something was breaking. I don't know what that was, right? And I don't know why, but I can tell you that if it was concurrent with JP Morgan refusing to take as collateral European debt as repo, and there was problems within the European markets, Powell was forced to pivot then, because LIBOR was still the law of the land. And there was still too much intertwining and too much potential contagion risk between the US and the European markets, right? Today, they're mostly decoupled from each other. Like, the real de-dollarization has been that there's now a big kind of wall between European markets and American markets. And this has been a gradual thing that's happened over the last 3 or 4 years, which is part of the reason why I disagree with Jeff Snyder that the Eurodollar futures market is signaling that Powell has made a terrible mistake. Or, as I put it, and I asked Daniel DiMartino Booth about this, and I said, do you think, Powell, everybody's been screaming that Powell's made a policy error, and she said he did it on purpose. He had to do this in order to start the process. It was a planned policy mistake. It wasn't, he's not doing this, ignorantly, out of ignorance. Okay. He's doing this because this is the way out. It's now for everybody to start to accept, which is, what I've been saying is, don't take these yield curve inversions. I heard something the other day. Somebody was talking. I read an article. I saw an article the other day. Somebody saying maybe yield curve inversions aren't telling us what we think they have always told us in the past, right? And I can't remember who wrote the article. I saw it on Zero Hedge, but it was making the argument that the yield curve inversions were a reflection not of anticipation of a recession around the corner. Not that I don't think that there's not a recession coming in like 2024. I do, right? That it's actually indicative of something else. That it's indicative of other things happening. Here's something to think about, and I was just thinking about this, and maybe this is something that Deer Point can consider as well, because he clearly knows more about this than I do. Which is the following. I teased this thing about the Bank of Japan earlier. Again, this is all really fresh in my head, so I was just putting this kind of argument together in my head this afternoon. Kuroda is about to step down from the BOJ, and for most of the last year and a half, I've been arguing from the position that the BOJ is always the Fed's wingman. That Kuroda has done, when the Fed needed a stronger dollar, Kuroda was there to help him out, and when he needed a weaker dollar in the last, say, 6 months, Kuroda was there. I've revised that. I may have been wrong about that. Most likely I was wrong about that, because I'm now beginning to think that Kuroda was actually acting as Lagarde's wingman by keeping the yield curve control on. It actually allows for it helps Lagarde maintain the credit spreads that Lagarde has been clearly worried about, right? Which is why she put the TPI in place in July. Remember, in July, she put the transmission protection instrument in place, what I like to call the toilet paper initiative, because that's exactly what she's going to turn the euro into if she tries to maintain credit spreads, because she can either defend credit spreads or she can defend the euro, but she can't do both at the same time. Well, if she's got a wingman in Kuroda over at the BOJ, keeping, which is allowing, for example, like why can't the U.S. 10-year make it above 4% right now? Right? It's like 4 or 5 times it's like tried to push through 4% in the last week and keeps getting rebuffed. And every time I look, just when, credit spreads like the U.S. German 2-year or the U.S. German 10-year spread starts to collapse below a certain level, there's a massive buying spree happens in the U.S. Treasury market. And if with Kuroda keeping the yield curve control in place, it's making it really easy to do that, because there's a natural carry trade there, right? JGBs, 10-year JGBs are 0.5%. As long as the spread between those and the U.S. 10-year say a certain distance, then maybe that's what's allowing, Lagarde to maintain, a slow come down of the U.S. German spreads, for example, right? Well, we're getting this new guy, Ueda, is coming in, and FYI, I read a great article today talking about, why did Amaniya not take the job? He was Kuroda's right-hand man for the last 10 years. He doesn't want the job. And if you read the article that I don't know if I posted it on my Twitter feed. I think I posted it privately because I was going to write about this and talk about it for my patrons tomorrow in our market report. I do a video and slide deck market report on Wednesdays and Sundays for my patrons. So I believe that they should generally get the best information first, because they're paying for it. And I'm thinking, well, Amaniya didn't want the job. If you read the article that I wrote and long quotes from him about, well, maybe, we've had yield curve control in place, but we need a different person and I've been part of the architect of this, and we need a new face. I need a new perspective on Japanese monetary policy to be more objective about the needs of Japan. That's what he said. I'm kind of paraphrasing. I don't remember the exact quote from the article I read today, but that's a clear statement to me. he got the talk from someone. And Ueda, I think, is going to end yield curve control and start normalizing Japanese monetary policy. And if so, Lagarde, then then everything changes. Now, all of a sudden, Lagarde's desperate attempt to maintain credit spreads to keep the European banking system from collapsing, all of a sudden loses another foundational pillar. Because why is Kuroda stepping down? Why is some guy who's not, normal for the next guy to take over, right? Yellen was Bernanke's right-hand man. And they even said in the article, they're saying, well, it's maybe time for no longer for academicians to be running monetary policy. Look at what Powell over at the Fed said this, and no longer is and Amania, like Kuroda, was trained in the West at Western economics universities. Went to the same schools as Bernanke and Yellen. Trained in the same Keynesian orthodoxy. Is the new Bank of Japan head going to be somebody who's not cut from the same cloth? Is he going to be more of a private industry, private equity kind of guy? Oh, should you maybe recalculate what you think about the Bank of Japan? I think it's worth a consideration.
Yeah, overall, just great stuff. I want to be generous with your time, Tom. So I'm gonna get to some questions here. I think
Sure.
We'll have this as kind of the last go. Well, I guess
sure. Fair enough.
We dropped down, so I'm not sure if he was unable to hear or whatnot. But Fish, I believe you were next up on the list. What's up, man? How are you?
Hey, what's up, Tom, and what's up, Mr. Green and David and Phil? I wanted to say that I think that the U.S. dollar it's backed up by nothing. It's a foundation. It's an empire built on sand.
Agreed.
And it's like the ocean is about to fucking hit it, and it's not really backed up on nothing. It doesn't really have a strong foundation. It's not really, John F. Kennedy, he tried to back the U.S. dollar by gold, and what happened with him?
Mm-hmm.
He got shot in the head.
Mm-hmm.
And it's so deep and it's so wrong that they know who the shooter is. They know who the killer is. I promise you. They know. They pre-planned the entire thing of him getting murdered. They already figured out the location, where he's gonna sit, where to position the sniper. Whoever did the job, they knew all about it.
Okay.
But to this time right now is that they act like they don't know who did it, and so it's gonna collapse. It's just not backed up by anything,
Again, I don't. But here's the thing I want you to think about. Everything I've said tonight is in service of what order of operations has to occur in order for these things. Look, you have to realize, it's backed up by nothing. It's not it necessarily worth anything. Blah, blah, blah. You're right about all that. But here's the thing. It's the reality of the day. People believe in it. And as long as they continue to believe in it, and the people who have put the system in place are going to fight tooth and claw to maintain as much of that system as possible. Okay? And they're going to defend it for as long as they can. And they're going to make what I think are very predictable moves in order to do this. Okay?
Oh, Tom, I have a question.
So,
do you think they're going to start an active war or something like that, and call it like a war for freedom or a war for democracy or something like that?
The clear plan at this point is to print to the gills for climate change, in order to combat climate change. And when the system starts to collapse, it will be under the cover of a war. They're desperately trying to start a war as a cover story to spend all the money, to do all the war spending, because the pension systems are already broke. They have overpromised. They don't have the money. And so this is the playbook. You're absolutely spot on that they're trying to do this. But notice how, if you listen to Putin talk very carefully and you listen to Xi, it's very clear that they understand what the West strategy is, and they're not. This is why Putin refuses to, rise to the occasion, and he keeps taking punches. Remember, it's not how many punches you can throw that wins you the fight. It's the number of punches you can take before the other guy is exhausted. This is Muhammad Ali. He's rope-a-doping the West financially, militarily, politically. Okay, that's what he's doing. I don't know whether Russia's going to survive this or not. I don't know if they have the ability to beat NATO in a straight-up fight. I don't know any of that stuff. I have some bets placed. I have my probabilities here, my probability matrix, right? If it's a roulette table, I'm playing certain numbers, but I don't have a certainty for it. But what I can tell you certain is that they're trying to do this. And that's the wild card here. Because if they can convince the population that we need to do trillions of dollars in war spending, well, then that neuters the Fed trying to raise interest rates to 7%. Because now the Fed will have to go back to the zero bound in order, or at least pivot, in order to monetize trillions of dollars in new spending. But the reality is also that we can't even gin up production fast enough in the course of the next 18 months or 2 years to fight the industrial war against Russia that they would have to fight. Russia's already got that industrial war machine in place.
Hey, Tom, when the dollar collapses, some people are saying it's going to be the greatest financial transformation in our history, because the collapse of this dollar will mean the collapse of, this lies in this empire. And so they're going to be joined to a multipolar system. So whatever the new currency is, it's going to be much more fair, much more equal. And so that's what people are saying. But what's your thoughts about that? What do you think?
Well, what I think is I take the whole multipolar thing very seriously. I don't think the dollar is going to collapse. I think the dollar is going to not be the same thing it was 20 years ago. I think the dollar is not going to be what it is today. But the dollar can slowly degrade and become a regional trade currency and even a regional reserve currency, much like I think the BRICS can put together. And I think it's all going to be tied to gold at some point as well, by the way. Because don't kid yourself. We have 8,133.5 tons of gold. And that's a very, very powerful set of assets. And they can be leveraged and used. And I don't mean leverage as in Ponziing it up. We've already done that. I'm talking about retying our money to gold slowly over the course of time. I absolutely recommend everybody listen to the podcast I did with Vince, because it's what has been obsessing. He's been obsessed with this since I first threw the idea at him, that we could capitalize the United States through the issuance of new debt to pay the entitlement funding problems, to pay down, do all of this stuff by offering a gold redemption clause, and then allowing the market and to value the price of gold upwards, which would actually expand the value of that debt. I'm going to be. Let me throw something at you. For 50 years, the United States, or longer, the United States has been against, and the Fed and the financial markets have been against the idea, fighting against the rising gold price. Why? Because a rising gold price threatens the dollar hegemony. But what happens when you get to a point where you can't keep dollar hegemony, right? Or you have to defend dollar hegemony against the forces of de-dollarization? Well, you eventually get to a point where you can't lever that Ponzi scheme anymore. You eat all the smaller Ponzi's. Remember, the Fed is the biggest Ponzi scheme in the world, right? And to say that the Fed can't outlast all the smaller Ponzi schemes that are out there. The Swiss National Bank, the ECB, the BOJ, all these other. These are all Ponzi schemes, but they're all smaller Ponzi schemes than the Fed. And so the Fed can, by raising interest rates and pulling back on liquidity, you collapse all of those and you roll up, and the Fed holds on to its position for a little while longer. If you can create a new attitude in Congress and you force fiscal responsibility back on the Congress, which we're in the process of doing right now. Now, Jim Jordan just came out today and said, we are going to use the power of the purse strings to rein in the Department of Justice and the FBI over what they did with January 6th. Jim Jordan said this today. I'm like, sounds good, Jim. Now do it. Just a small little signpost of what's to come. Then let me throw this out at you. The United States needs to sell debt into the future in order to pay for its entitlement funding problems, Medicare, Social Security, and the like. Well, how do you do that in a world that's hostile to you? Well, if you institute a 5% gold redemption clause on a 50-year bond, and the 50-year bond is paying a nominal 2% coupon, but it's redeemable in 5% of it in gold, you buy a $10,000 bond, and $500 of that at the end of the bond is going to be paid to you in today's gold price. So roughly a quarter ounce of gold. You're going to get a quarter ounce of gold from the Treasury at the end of the bond. But now the Fed is incentivized to allow the price of gold to rise in order to continue to get the investors the yield that they require to hold on to that bond and not sell it. And how do you do that? You allow the price of gold to rise by 10% every year. Now all of a sudden, what's the coupon rate on that bond? It's no longer 2% plus gold at the end. Now it's 5%. Now it's 6%, 7%, 8%, 12%. Dude, I'm telling you, this is the way it's going to get done. Gradually, you will reintroduce sound monetary principles back into the system. But you can't do it all at once. We can't go to a gold standard tomorrow, because to do that, again, dogs and cats living together, mass hysteria. These things will be, just like it took 5 years to roll in SOFR and to kill LIBOR, to get the Europeans out of our monetary policy. Well, guess what? It's going to take another 10, 15, 20 years to remonetize gold into the system. And the Fed can do this, but can only do so if we, as a country, commit to fiscal austerity at the government level, which means cutting back on the empire, no more wars, blah, 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 blah. And what I can see is I'm seeing very powerful forces within the Department of Defense going, dude, we cannot go to war with Russia. And so I'm seeing it from the Department of Defense. I'm seeing it from other angles. I see a lot of what I'm seeing from Wall Street and the Fed. I see that quote unquote counter revolution happening, and I've been talking about this for a while now. Again, there's a lot of moving parts to this, but when you know what you're looking for, you can start to see it all over the place. I hope that answers your question.
Just to add to that point, I mean, half of us here are probably Bitcoiners, and I completely agree. Fed's going to go to gold first, but then there's also the hypothesis that we share in the community that perhaps Bitcoin is the collateral that is basing SOFR rates. But where do you see Bitcoin playing this? Because you mentioned that they're going to probably throw it in whatever basket of commodities that they'll use to back the dollar. That's just a hypothesis, but what do you kind of see in that regards?
No, Jerome Powell has said multiple times, I have no problem with Bitcoin. I have a problem with stablecoins. I was actually asked by Caitlin Long this afternoon, DM me. We were chatting on Twitter DM. She said, well, what do you think about Powell and stablecoins? And he's making the move against stablecoins. I'm like, stablecoins are just Eurodollars. Of course, Powell's against them. They're just crypto Eurodollars, crypto offshore dollars. And where's the offshore here? It's in the ether, right? Bitcoin is a bearer asset like gold. I'm on record as saying I think 10 years from now the Fed's got Bitcoin on its balance sheet.
Great stuff.
I really do. I don't see why they wouldn't. If they want to, they're gonna. I think Bitcoin winds up. If Bitcoin is not compromised, again, I'm a Bitcoiner, guys. I am. But again, like everything else, distrust but verify is the way I kind of like to go through life at this point. We're all a little cynical and we're all a little black pilled. I think being distrustful is a good idea, but verify even your own distrust about where things are. I think that's a better way of looking at things. I don't trust Powell. I don't trust the New York banks. I think they're acting in their own best interest. They're not acting in our best interest. They're trying to save themselves. And in the short term, our interests align.
For sure. Yeah. I mean, hey, great question, Phil, and great back and forth there. Matthew, you occasionally appreciate it. What you got?
All right. Hi, everyone. Tom, I love your podcast, and thank you to the host and co-host for having me on. I wanted to ask you, Tom, I've been doing a lot of research into the topic of carry trades. When you brought that up earlier, I swear I had the biggest smile on my face because I was waiting for you to say something about that, and especially with regards to Japan as well. I want to know what your thoughts are on the carry trades, currency carry trade, its effect on the dollar, and how you see the Fed might be knowingly using this in the short-term currency environment and then more in the long term. Do you think that they're consciously trying to manipulate the value of the dollar by enticing?
Yeah.
So I'll just throw out one more. I'll just throw
Okay,
out one more
go ahead.
detail.
No, I mean, expand on that point, Matt. Go for it. Tell me what you're really thinking. Like, I
Okay,
want to
so
hear.
this is what really gave me goosebumps is right before I came on here, I just did a quick look to see, okay, what's the 10-year U.S. Treasury? What are all the other major economies' U.S. Treasury, or what are all the other economies' 10-year Treasuries looking like? And it stood out to me as if it was like highlighted and circled in red.
Mm-hmm.
Brazil, Russia, India, China, South Africa, and then Turkey all have 10-year Treasury rates above the United States.
Yes.
The U.S.'s 10-year Treasury rate is higher than almost all of our allies and all of those that you would generally assume to be on our side in this conflict with Russia.
Yes.
So I'm wondering, what is the strategy going on around that? And do you think this is like a short-term thing? Do you think that this could go out for like years?
Well, okay. I think that the U.S. 10-year is massively overpriced. And I think that what I alluded to earlier as I was thinking about this relative to the BOJ, I think that the Bank of Japan, remember, when the zero bound, right? The U.S. dollar became the ultimate carry trade currency, right? We're at zero. You could borrow dollars for nothing, and then you can get positive yield in some other place and buy, I don't know, Turkish lira or, Italy or whatever, right? At a higher yield. Until Draghi went to negative interest rates. And then the carry trade reversed. But Japan's been at the zero bound and doing yield curve control. Now they're the ultimate carry trade. So if there's a change in policy at the environment, which is going to blow up all the credit spreads, inter-sovereign debt credit spreads. So do I think the Fed is doing this purposefully? Well, if they're replacing the globalists' choice for a head of Bank of Japan with their choice of the Bank of Japan, what do you think? If you agree with me, I would say, yeah, right? If you agree with me, then clearly what's coming next is, yeah, Lagarde is fucked. Okay, couldn't happen to a nicer globalist pig. But if I'm wrong, then I don't know. If you don't agree with me, well then what's your counter scenario? So I do think that there's an angle, a Japan angle on this that is very important. And I'm being honest here when I say that I only just started really reconsidering everything about Japan in the last like 72 hours. So this stuff is really fresh in my head. And, when I start thinking about carry trades and, all this stuff, I have to like, my eyes start to glaze over because I'm like, it starts to get confusing. Like this shit's not easy, right? And it's not my normal, and it's not in my normal wheelhouse. So I think you're on to something here, Matt. I think that the Fed is, I think it's part of the reason. Let me be conspiratorial for a second because it's not like I've never been that. If you were Davos and you were trying to continue to promulgate the idea that the Fed needs to pivot and the Fed is making a policy mistake, would you not stick your thumb on the scale of the 210 spread and try and make it as bad as possible? Of course you would. And so who's doing that? Well, you got Janet Yellen trying to do yield curve control here in the United States, selling 2 years, buying 10 and 20 years. And you've got Kuroda over in Japan keeping the JGB 10-year at 0.5%. And reluctantly having to go to 0.5%, even though because the market kept breaking. Why did the market keep breaking? Because, no one wanted to believe that the Japanese 10-year government bond should be trading at, 0.5%, should be trading at 1% or 2% or whatever. Well, what if we have a Bank of Japan dude comes in and says, yeah, it should be trading at 2%? What does that do to Europe? What does that do to the euro yen cross, which has been in a massive bull market for what, a year and a half now? I brought this up in Twitter this afternoon, and Francis Hunt got back to me and he said, we have that's why we're very long the euro yen cross. I'm like, really, Francis? I would be careful. And then I tweeted it, and then I quoted the article that I read this afternoon back to him. I said, you might want to think about that in light of Ueda coming in as the BOJ head, because he may not be that guy to continue Kuroda's policies. Then the carry trades blow up, and that position may change overnight. I have Japanese market participants and guys over in Japan who are very, very who are very, very opinionated about what they think the BOJ is going to do. The BOJ will only allow the yen to depreciate so far. So maybe Francis will be right in the short term. The yen will go back to 150, and it will depreciate more than the euro will in the short term. But I don't see that trade is a very long-term trade. I can see that trade being, 3 or 4 months before it then all starts to go the wrong way. So I don't know.
Yeah, just to add a little bit to that, I think what's really
Sure.
interesting me is the whole concept that obviously like carry trades are built off of leverage, but then you also have the recipient country of that trade, their currency becomes overvalued, and then their their economy experiences, a growth spurt that probably shouldn't have happened. Their stock market soars, and then you have this like dislocation of the market with the currency value both being overvalued. And what really interests me about the current setup is that the United States historically has been the funding currency. And now when you look at our relation to the other sovereign banks on our side of the conflict, you see that the United States is now the recipient country. And
yes.
It almost seems like Russia and all of their allies are trying to fight against that by raising their rates even higher. And so I guess that dynamic is what's really puzzling me, is like, how does this play out? I see the dollar becoming devalued when these carry trades unwind, but it's like, how long does it go?
It's going to go for a while first, because the markets you're talking about are much smaller than the ones that are in the West. The Russians have moved. Here's like the Russian yield curve, to be honest with you, that's a specious. I would take Russia and put it aside, because their yield curve is a mess, for a variety of reasons. But the Chinese still have an upwardly sloping yield curve. Correct? I'm now asking that question honestly. I haven't actually looked at the Chinese yield curve in a few months, but I believe it is. I'm more worried about the 210 inversion or the short long inversion on the U.S. yield curve and why it keeps deepening. And I think that there are still things in play. I think there are still forces in place that are keeping that in play. But I don't believe that it's like pressing on a balloon below or a basketball underwater. Eventually, the trade has to reverse. The BRICS nations have to run higher rates because they're still emerging. They're still trying to attract capital. So you attract capital by letting rates stay higher. But here's the interesting part about this. The Bank of Russia is back to 7% after first going to 20 and now they're back to 7. They're literally at the same rate they were before the war. And Nabiullina, the head of the Russian Central Bank, is not one of my favorite people. I happen to think she's IMF trained and a globalist and in many ways almost a Russian fifth columnist. But I also think she's been tamed by Putin. So she's a very interesting figure, Nabiullina is. I happen to know the Russian markets really well. So what I would say is this, 7% used to be, an emerging market rate, right? Or, a weak emerging market rate. It's now no longer that. The Fed's at 5. We're only 2 points away from where the Russians are. Like at some point, the Russian markets might actually be more trusted than the American markets in order to attract capital. But to your original point, as the carry trades unwind amongst the West, which is the big part here, because remember these economies are all bifurcating. The West and the East, their economies are bifurcating. Like deglobalization is real. But to your point, if the U.S. is the recipient of the carry trade, then don't expect the stock markets to crash here in the United States. Right? Capital is going to flow into the United States.
Yep,
Yo,
the
Tom, I
conclusion.
got a question. The U.S. M2 supply, you know what the M2 supply is, right?
Yes, I know. Yes, the growth rate has gone negative.
Yeah, the U.S. M2 supply, which includes all the cash inside people's bank accounts and investment CDs and cash outside their bank accounts, has decreased. It has not increased. So
Yes.
what
They
do you
also
think
changed
about that?
They also changed the definition of M2 to make that look worse than it. They've changed the definition of M2 recently, so it's very difficult to actually. There was a great article about this about 3 or 4 weeks ago, talking about they changed the definition of M2 either at the beginning of I think it was the beginning of 2022. So some of those arguments about M2 going negative, the growth rate on M2 going negative is an artifact of the new definition of M2. But if you recalculate M2 based on the previous calculations for M2, it actually hasn't yet. So we aren't looking at a recession because of if you believe that, and then when you overlay M2 with recessions, the growth rate of M2 with recessions, whatever goes negative, we have a recession some number of months later. I think it's between 11 and 18 months later. We haven't gotten there yet. M2 by the old calculation is still positive, and therefore we're still at least another, 9, 11, 12 months away from what you would consider a recession, and it still has to go negative yet. So, no, financial conditions in the United States are stubbornly good. It's really pissing people off. Bears, that is. That people who want to see the American economy crash. I am on record as saying there will not be a recession in the United States in 2023. Period. 2024, different story. 2023, no way.
All right, awesome stuff. Well, never right. You've been very patient. Appreciate it. What's up? What you got for? And Tom too, if you've got one or got some other thing that you got to get to tonight, be sure to.
Other than my Guild Wars 2 dailies, guys, I've got nothing going on. It's 20 after 10 where I am. So what am I doing? I'm smoking a cigar. I'm having a sparkling water, and I'm chatting with you guys. I'm good.
Okay.
My wife's already gone to bed. We're fine. So
all right, awesome.
Yeah.
We'll keep it rolling then for at least
Yeah.
or 40 or
Yeah,
something.
how's everybody doing?
Good.
Hey, Tom, I got a quick question. You said Janet Yellen was selling like the 2 years and buying the 10-year.
Yeah.
I heard that before, but did that actually happen?
From what I understand, I got to believe that even if if she's not doing it within the general account, she threatened to do it. I think she's actually doing it, but we're going to watch the Treasury general account balance to find out if it's actually happening or not, because it's falling. So I'm going to assume that it is, and if not, she may even be doing it through the what's known as the plunge protection team, the president's financial group on working group on financial markets, right? That one. From what I understand, I'm assuming that if she isn't doing it, then she got to talk to as to why she isn't.
Okay, thank you.
All right, great question. Dear Point, what's up, man? You got Dear Point, we got you. If not, I think we've got a few others who have been patiently waiting.
Okay.
Kuda, I think that's how you say it. If it's not how you say it, I apologize. But what's up? You got for us?
Hey, hey guys, I was gonna ask regarding something that you touched on some moments back regarding the United States dollar crashing eventually. There was a guy who said that it's based on nothing. So my question is, why would you guys say that the US dollar is based on nothing? Isn't that all currencies right now fiat currencies? That's the first point. Then the second point is that isn't it also that there is a reason why the United States dollar is the reserve currency? We can look back to the Second World War, Bretton Woods agreement, and all those factors. So because it sounded like you guys were just talking as if the United States dollar was foisted.
No, it's not the only one.
Was foisted on the world, and it's not going to last. Blah blah blah. So I just wanted some clarification.
I don't. No, I don't. I was just working with the commenter. It's based on nothing when it's considered in relation to some kind of rational calculation to gold, right? So, and then tied incremental in some way to gold or to a bearer asset. I do not. And then on top of that, the fact that we run a fractional reserves system on top of that, ultimately it is based on all fiat currencies and all fractional reserve systems are based this way. And I'm a Rothbardian. When it comes down to this stuff, I believe we should have a 100% reserve banking system. I think we should have inviolate consumer sovereign property rights and all the rest of it. Meaning, monetary units should be single claims to. There should be single claims to every monetary unit that's out there. I'm sorry, this is the way I perceive the world, and from that perspective, all of this is built on nothing. That's what I mean. Now, they're all built on this system. And they're built on that system because we never really had the fungibility mechanism by which to resolve all of the potential transactions within an economy. So, look, as the division of labor rises, the demand for money rises. And as capitalism, produces wealth and, and sorry, I'm losing a little bit my train of thought here a little bit. But as capitalism produces wealth, the natural natural cost of production reaches the steady state that's cost plus above the input cost, and invariably what you wind up with is economies of scale create tremendous amount of efficiency that can't be measured in individual unit cost. Paper clips, for example, cost fractions of a penny to produce and to sell, right? So if you want to sell a paperclip, not that anybody buys a paperclip, then you have to you either have to inflate the money supply in order to carry out the resolution of the transaction of transacting a paperclip versus something else, or you have to offer up 20 paperclips for a penny. But so part of the reason why the gold standard failed in that respect is because gold couldn't be divided enough in order to affect the necessary resolutions based on the demand for money to do that job as a medium of exchange. One of the great things about Bitcoin is that it's infinitely fungible, right? It's hard-coded that a SAT is 10 to the minus eighth Bitcoins. There's no reason why we can't, issue a BIP and make it 10 to the minus 16, right? For right now, 10 to the minus 8 works.
But
money, so money is this is one of the problems with the whole fiat currency argument and fractional reserve bank and all this stuff. It's like money as a technology is changing and it's clearly changing to suit our needs, based on our ability to create a more sophisticated division of labor and therefore a more sophisticated network of pricing comparisons within an economy. That's a very important point that is always lost in all this. It's like, how do you do that when you've already got things down to the point where things cost less than a penny, and someone may just want to buy something that's less than a penny, even if it's just supporting your favorite podcast on Fountain for 9 sats or whatever, right? Like, this is the kind of thing that we finally have technology that will allow us to do that.
Just a really quick question, Tom, in that sense. Was it really the fungibility that, let's say, since 1973, the Coinage Act, and specifically the free silver movement that we saw in 1969 leading up to even the 1907 panic, we saw a lot of, let's say, willingness for federal centralized control to mitigate inflationary pressures in that sense, and to say we're going to remove the natural judge that, let's say, mining supply or the shock that increased mining supply or gold reserves / silver reserves would necessarily have upon an economy, and mitigate it through this, let's say, fiat currency.
No, because the mining supply is attenuated like all other commodity production. High prices are the cure for high commodity. The cure for high commodity prices is high commodity prices. The cure for low commodity prices is low commodity prices. The demand for money ebbs and flows with the supply of with the needs, and when if gold is money or silver is money and people need more silver to do what needs to be done, then the signals are transmitted through the system, through the pricing system, to increase silver production. And it's only when we have, as you alluded to, somebody breaking that system and trying to insert something else into the system, credit comes into play and all this other stuff that trades at a discount. But, again, that's not the real problem. The fungibility is an actual problem when you start talking about resolution of trade. When you're dealing with first, second, third, fourth order economy, trade can be handled by low resolution money, right? Shovels used to cost in 18 like something that cost $10 back in 1870 was a half ounce of gold, guys, and getting a half ounce of gold is easy to deal with. But what happens when you can buy that same thing for 4 grams of gold? How do you carry 4 grams of gold around in your pocket? Or you know what I mean? This is the problem. And that's a natural evolution of economies of scale and a sophistication of an economy. Now, how do you compare chips to a shovel? And the medium of exchange needs to be able to do that. And so, if it only we could have either added could have added more decimal places to the dollar, which we didn't do, or we can inflate. That's really what it comes down to. I mean, again, at a certain level, have there been malign actors trying to usurp the property rights of sovereign consumers over the last 350 years? Of course. That's what we're dealing with. We're dealing with the end of that system. We're dealing with that system hitting its apotheosis. That's what we're living through. And that's why we have to go back in the other direction. And that's why the technology, and that's why Bitcoin is so interesting, because Bitcoin is actually the first money that is infinitely fungible that will still allow for consumer sovereignty. We don't need to inflate the money supply to deal with the future demand for money. And if we do, well, we can create Litecoin, or we can create Monero, or whatever. And if we need more monetary units to run around, but then to liquefy the system, fine. But it'll be market driven. And it's only kind of market driven today. And there still will not be competing claims to Monero, Bitcoin, and Litecoin. There will be comparisons between them. They will trade at different exchange rates, but there won't be 12 people trying to claim the same fucking dollar, which is what the fractional reserve system does. That's a fundamental abrogation of people's sovereign property rights and people's sovereignty. We want a system of consumer sovereignty. They don't. They want tax farms and tax cattle, debt slaves. And the money we have today is based on debt. You pay interest on your money that you have in your wallet. The money is sitting in your wallet right now is losing value because there's a debt instrument against it that you have to pay. And you're the holder of the promissory note, so you're the one who has to pay. That system has to, that's the system. We want to get away from that system. That's why Bitcoiners have become religious fanatics about this. And I don't blame them. I just don't know that Bitcoin is the only future here. That I don't believe. But I believe that it's the signpost leading us in that direction back towards the sovereign consumer and away from sovereign governments, which just point guns at us and tell us to pay taxes. So I've kept my political, radicalism to a minimum for this talk because don't get me started. Don't get me down that rabbit hole. I'll be here for 3 hours, and you guys will be angry with me by the time I'm done with it, or cheering. I'm not sure. One or the other. So
yeah, probably split down the middle at this point. I know we've had Deer Point waiting for a little bit. I know you had your hand up earlier. We couldn't hear you. Sure. So Deer Point, we got you back. If not,
yeah. Sorry. When you originally called on me, I was putting a dip in, and then your hands get all moist, and you got to wash them off because they're. Anyways, dippers know. But,
yeah, dude. Far be it for me to get between man and his tobacco obsession.
So, I'll be the devil's advocate in this combo. For me, do we really see, let's say, de-dollarization? I think it was Matthew who was talking about Turkey, and I think the 10-year Bund or the 10-year in Turkey is at like 12%, but inflation on a year-over-year basis is 55%. So you're still getting absolutely greased. But that's a bit of a different conversation. But so my thing is, when we look at de-dollarization, how do we move into a state of protectionism? And the University of Beijing, which is a government entity, so it's probably worse than even what they put out, but they said that the aggregate manufacturing industry within China is experiencing diseconomies of scale. So, the question is, well, okay, that's because, we've moved all of this manufacturing, and all of these, developing nations have had to build out all of this manufacturing infrastructure. And so therefore this is why we're getting diseconomies of scale. That's one argument that I've heard. Okay, fine. But the thing is, if we move away from globalization, China does not have the ability to onshore consumption. Like, and then if you look at nations like Russia, even Russia, like Russians are not wealthy enough to start to onshore all of that consumption. And even Saudis, I know people have this idea that Saudis are rich, but Saudis are not Emiratis. I think their GDP per capita is like 26,000, right? Like, really, Saudis are actually very poor. This idea that they're wealthy, this idea that they're wealthy,
the ruling classes,
the ruling classes. So even like, could Saudi Arabia onshore this consumption? And then it's like, where do these nations who have built out all of this manufacturing infrastructure, what do they do? Right? They would have to have somebody to buy that, or their economies would kind of,
Well, one of the things I would caution about in this argument, not to be, I'm not trying to. I just to remind, I don't particularly like GDP as a statistic. I think it's a terrible statistic. Two, a slightly better version of that statistic is purchasing power parity GDP, because that's actually a better, as bad as it is. Because remember, GDP is not gross national product. GDP is gross national spending. Says nothing about the quality of the spending, what you spent the money on, what you did with the money, blah, blah, blah. You just spent it. And this is one of the fundamental problems with, basic Keynesian economics and this whole GDP and this whole demand-based side of the equation, completely ignoring the supply side of the equation. Let me put it to you this way. Today in the United States, what are eggs per dozen? They were $10 a couple of weeks ago. They're probably, let's just say they get back to a run rate of like $5 a dozen. Dude, I used to have a hard time selling chicken eggs at the farmer's market when they were boutique eggs 7 years ago, at $4 a dozen, because everybody was getting them for $1.50. Now, you buy 2 dozen eggs at the store that cost you $8 last year, but this year cost you $10. You still bought 2 dozen eggs. GDP has gone up by 250% relative to those eggs. You bought the same number of eggs, but GDP is $20 versus $8. This is why purchasing power parity is a better indicator of these things. Just to note your argument. This is why the Russian economy is not the size of Canada. It's bigger than that of Germany. Okay. All right. In terms of actual production, using GDP, purchasing power parity terms, the Russian economy is over $4 trillion, not 1.5 or 1.7 trillion. Okay, it's bigger than Germany's now. Just to remind. And therefore, on a purchasing power parity per capita basis, Russians are actually producing more than, and I don't know what the number is for China, off the top of my head. I haven't looked at it, but it's something to consider. But go ahead.
Yeah, great stuff. Dear, did you have a follow-up? If not,
yeah, I mean, I didn't think he hadn't finished his point. I interjected. I'm sorry, but I just wanted to make sure that.
Yeah. Of course, it's and I would agree. I don't think that necessarily. And I mean, the perfect case of that is even China building ghost cities. Theoretically, residential.
Yeah, exactly.
Goes into I, and therefore that increases the I part of the. Of GDP,
classic Misesian malinvestment, like Chinese ghost cities.
Exactly, but this is where when I look at a lot of these nations, even if you were to look at like debt spending, so like kind of the measure of how much debt it causes to increase, by $1, you're looking at like $2.50 in China to get $1 of essentially growth out of that, like real growth. And so like if you look at a lot of these nations, they're much more indebted than the United States. And so that's why I'm like, even on a bifurcation like kind of basis, I don't see it. And like my father's Azeri, but like we lived in Turkey, like my father's side, my mother's like American, but like like even if you look at Turkey, like I think that now Erdogan's kind of on the way out. It seems from like the most recent news out of there yesterday, and so now you're starting to look at like this is a nation that's always kind of championed Western values more so than Eastern values. So like when you start to like look at a lot of this bifurcation, I think that it's going to be very interesting to see how it all plays out. What happens with Iran, right? That's also a big thing. If they start to turn to the West, if the son of the Shah returns,
they will never. Okay, I'm telling you right now, none of that is real. Erdogan is not leaving power in Turkey. The Iranians are not turning towards the West. The son of the Shah, please, are they going back to the same well that they this is all British intelligence propaganda. I'm dead serious when I say this. This is and now I'm going to put my geopolitical nuts on the table. And I don't mean to be rude, but no fucking way. Russia, China, Iran are a tripod. The Russians and the Iranians just merged their banking systems. Like Raisi and Xi just met, for Christ's sake. Do you know how much money the Chinese and the Russians have poured into Iran in infrastructure and oil spending in the last 2 years? Like hundreds of billions of dollars of long-term strategic investments in the Iranian economy. It is not coming back to the West. Period. Ever.
But Tom, what about Baku is growing increasingly hostile towards the Iranians, and with that, so is Israel, right? Because they're using Azerbaijan airspace to strike.
Yeah, and now let's look at what's going to happen in Georgia. I was just literally talking about somebody talking with one of my Serbian patrons about this about 2 hours before we got on this call. Like why do you think they're so desperate to get Georgia into NATO and the EU and all of that? And they're not going to get it. Like the Georgians are going to turn away completely, and then there will be a land corridor from Russia directly down into China, into Iran. The international north-south transport corridor is here. Erdogan has already pivoted to the east. He has been under constant currency attack for the last 4 years. Is this classic John Perkins style economic hitman stuff that's been going on against Erdogan. We tried to overthrow him in 2016. The Iranians are the ones who harbored him during the coup. I have this directly from people in Iran. When Erdogan during the coup gave out, sent out that video on his iPhone, he was doing that from Iran to tell his military forces to that was run. The whole coup against Erdogan was run out of the NATO base at Incirlik. The whole thing. We tried to get rid of him because he refused to go to war with Putin over the Su-25 incident. We've been trying to get rid of Erdogan for 6 years, 7 years now. It hasn't worked yet. Erdogan is a member of NATO in name only at this point. He has already, but what he actually wants to do is chart an independent path for Turkey. And that's what's going to happen there. The Azeris, yes, have been playing this game. So have the Israelis, and Turkey is, again, Erdogan is a wild card because he's constantly stirring up shit everywhere, but he's doing so in order to chart an independent path for Turkey to be the pivot country, because it is geographically between East and West. And we won't let him go. And if he does not toe the line, we're going to try and get rid of him in this year's election, the same way that George Soros has openly declared war against Modi down in India. FYI, if you didn't see that the other day, I wrote about this last week.
I know Tone has his hands up, but this is because, for example, my uncle works for the opposition party. He works for the CHP, which is the Cumhuriyet Halk Partisi, which is Ataturk's party, right? But but if you look at what is happening in Turkey, Turks are becoming increasingly unhappy with Erdogan, right? Domestically.
Agreed.
Because again, you go to Istanbul. I know I have a Turkish friend down there as well. You go to Istanbul, it's becoming Arabized, and Turks and Arabs have never really gotten along historically, even dating back to the Ottomans, right? And so I think that even Turks, as I'm sure anybody who knows Turks are extremely nationalistic, and I feel that this whole Islamization and Arabization of Turkey, I think has a lot of people unhappy domestically, and so that's kind of where I see can Erdogan really survive this, unless obviously he rigs the election, which obviously in that region is a complete possibility. But I also think, going back to the Iran question, I don't think Azerbaijan would allow this absent Ankara's approval, because like Azerbaijan, Turkic-speaking nation, but I don't think that they would make a move like that without Turkey. And much the same with Nagorno-Karabakh, when that all kind of kicked off a couple of years back. There was a large Turkish presence there as well.
Oh yeah, no.
So that's
Erdogan Erdogan has played both sides. Remember, Erdogan was supplying drones and Bayraktar drones to the Ukrainians. He was playing. He's always playing both sides on this. And the Azeris, I agree that we have been fomenting this stuff with the Azeris for a while. Don't kid yourself. It's very important to understand that American/British intelligence policy or foreign policy, whatever you want to call it, has been all about destabilizing the soft underbelly of the Russians. Okay, this is all an encirclement strategy. It's nothing new. It goes back with the Brits. It goes back to the 1860s, for Christ's sake, when they were in 1870s when they were in Afghanistan. Aliyev in Azerbaijan is also a guy he's honestly, he doesn't know. I can see him acting the way he is because he's not sure who's going to win. But I can tell you that if Putin puts the hammer down in Ukraine, Aliyev will settle down. Like, as long as he can sell gas to Europe, he doesn't care. As long as he can sell gas and oil to Europe, he doesn't care. And he will. And he already is. But again, like that whole the whole southern transport, the whole southern pipeline that goes from Baku all the way across into Italy. God, what a boondoggle that thing is. Nobody's making any money on that. That's classic EU. That's a classic EU boondoggle where the supplier makes no money on the they get basically free energy. He's gonna be surrounded by people who are just not. He's banking on the U.S. and the West winning against Russia if he's going to play that policy, and I don't think that's going to work. I don't think the Chinese are going to be cleaved from the Russians at all, because China understands that if Russia fails, then they're next. Okay, Israel, with Netanyahu back in power, is going to do everything they can to gin up but again, even then, what are the Israelis really going to do? Like, Erdogan is making nice with Assad in Syria because it's costing him too much support at home to continue prosecuting the war against Assad in Syria. Like, these policies have to end, and he has to come home. So, we'll see. I don't know. I just think that Turkey's best path forward is not with the West at all. And I think they've already made that decision. It's why he keeps trying to be the guy to broker the peace deal. And almost had it done until, Boris Johnson stepped in. So, yeah. I don't know.
It's been a great back and forth, but Tone's been waiting patiently. So let chime in here. So, Tone, the floor is yours, man. Welcome.
Hey, man. Thanks for having me back on the podcast. Hi, Tom. I've definitely seen you in a few interviews, and I appreciate the work. I'm a podcaster myself, and I talk about pretty much the same exact stuff, so we're in general agreement on almost everything. Also, been following Martin Armstrong for a while. I was at two of his WECs, the one in 2015 in New Jersey, and the one I think the following year in Hong Kong. I don't know if you were in either of those.
I've never been to one, and I've never met Marty, actually. But we have a lot of mutual acquaintances, and I know I have a lot of patrons who frequent his WECs. So
I've tried to explain Bitcoin back to him as far back as that. I've definitely had a few chats with him, but I don't know. He still doesn't get it. But all right, I do have a few questions. I've tried. I've done my best. I was actually at his movie premiere as well, and I think it was the first person ever to ask him a question about Bitcoin. Might have been 2014 or something, or 13.
Yeah.
Anyway, a couple of questions. So after Powell's speech today, and I did miss the beginning. I was only here like maybe the last hour or change or so. How far realistically do you think Powell can raise rates? Because you know as well as anyone, it's already making the interest on national debt go exponential. And with every 25 basis points that goes up, the interest on debt is actually going to go up exponential from there on. Like the chart on Fred is already ridiculous, and it's going to get more ridiculous even if he doesn't raise any more. So that's question one. The other two, one is a little more of a comment. I don't understand why Martin Armstrong thinks that Iran is going to go to war with Saudi Arabia. I think they're going to sign some kind of a peace agreement and go into mutual cooperation soon because they have a huge enemy, the U.S., between them. And there has not been any, like, maybe over Yemen, but I don't think Yemen's that important to either of them. So that's part two. Part three, what are your views on North Korea?
Wait. I don't want to. I'll get lost on all of it. So it's fine. We'll come back to this. So I can answer part two easily. As you were talking, I'm like, I was just you couldn't see me because I was just shaking my head. Yes, yeah, I agree with you. Like, no, Marty's. I think Marty's miscalibrated on that. The Saudis and the Iranians have been in high-level talks for over 2 years, the Saudis understand that they're in order for them to survive and to get out from underneath the petrodollar system, they're going to have to side with Russia and China and the Eurasian Economic Union, the SCO, all of it, and they're making all of the diplomatic moves. And they're becoming members of all of those institutions. So they have to make nice with Iran. They're not going to go to war with each other, but to say that somebody's not going to try to gin them up into a war with each other, well, that's that's between you, me, and your favorite MI6 guy over Perfidious Albion. So, and number one, the first question, I think the Fed. I think the Fed has to go to 7%, and I think that is the clear signal that the American Congress is going to have to get serious about how they spend, and I think it's just that simple. We have plenty of fat that can be cut from the budget, and yes, is Social Security going to have to be reorganized? Probably a little, or we're going to have to move towards what I was talking about, which is some form of low-cost recapitalization where the Fed funds rate could stay at 7%, but they're issuing debt at a lower rate, and I think throwing gold down on the yield curve is the solution to a lot of that. And then, and here's the other thing: if the United States were to pledge to some form of fiscal conservatism, right? Do you think the capital markets would not reward them for that immensely? Like, that's what the world is waiting for. The world is literally waiting for the United States to grow up.
Yeah, no, I can't see that. I can't see that because then it's an admission that the current dollar system failed.
I don't know about that. I mean, why would you say that? It's just like, no, dude, get your like, I think what you'll see is a massive vote of confidence by global markets. Because look, the world doesn't want to de-dollarize if it doesn't have to. It's only de-dollarizing because the United States is running around like Rambo without a jockstrap, yelling at everybody and trying to put them in friggin' jail.
We agree. We agree.
Right.
But these guys would have to admit that they're wrong.
That's okay.
They've been wrong.
And I think, well, yeah, okay. Let's admit that we're wrong and move forward. And
but I don't think that's going to happen with any of the people currently in power.
I think that's the interesting part about the discussion. Is like, who is really in charge right now? I don't know who is in charge. It's clear that the crazy freaking neocons, the Newlands, the Jake Sullivans, the Blinkens and whatnot, the John Boltons, are clearly in charge of the Biden administration. I think that they're doing the bidding of Obama and Davos to destabilize the United States, and I think that the New York boys and the Fed and others, right? I think there are globalist plutocrats in the United States, and there are sovereigntist plutocrats in the United States. And I think the sovereigntist plutocrats are looking at this shit going, you got to be out of your fucking minds if we're going to continue doing this. And they're their mouthpieces are in Congress. You can see them. They are people like Joe Manchin and Kirsten Sinema holding the Democrats, back from doing even more insane shit. You can see, it from the grumblings from the DOD, from the U.S. military is clearly not behind this war in Ukraine. This is being pushed by the think tanks on K Street. It's being pushed by the Brits. It's being pushed by the Europeans. It's why Ursula von der Leyen first went to the British Crown, then she went to Kiev, then she went to Joe Biden. Now she's going to Canada. Like, this is clearly her. She's just like Queen Ursula going around and telling everybody what the freaking law is. I'm sorry. She's not a moron. Like, she was put in place to do this, exactly what she's doing. And I think they're very desperate at this point. When I see stuff like them floating the idea that they're going to put the Shah back in power in Iran, I just see that as a massive desperation move. It's no different than, like trying to freak everybody out about the Chinese balloon. It's just like we're in the amateur hour now. Like, it really is amateur hour.
Completely with you. I'm half Russian, half Ukrainian, by the way. This thing has been insane from day one. I've been trying to cover it, lost like probably 20% of my subscribers, maybe more, because of me covering the politics of the Russia-Ukraine situation. What are your general views on North Korea?
God, North Korea. Like, it's funny. North Korea needs to come out of the cold. The neocons love to keep them around as a boogeyman, to gin them up into, to throw them out there as a boogeyman. The Korean Peninsula, the Koreans want to reunify. We won't allow it to happen because of who we've got in charge in Seoul. It's like, nothing's gonna change until it's the key to the North Korea is going to be from the Russians. It's going to come from Gazprom. It's going to come from Rosatom. It's going to come from pipelines coming across North Korea down into South Korea. Like, this is stuff that we will not allow to happen. So we'll go to war over this this is part of the reason why we're going to war with the Russians. Because the Russians clearly want to bring, sanity to North Korea. I think North Korea is a mess, but like everything else, they are a useful tool of insane warmongering neoconservatives. And you being half Russian, half Ukrainian, and I sympathize with you trying to be a media figure and a commentator in this environment on that. I don't know how you do it. Like, wow, dude, seriously, I'm just some dude from North Florida. I've got no skin in any of this game anywhere. So, I have my hat's off to you for trying to navigate these waters.
Yeah,
I know how bad things are.
I was also there on January 6th, and I was very anti-vaccines and COVID lockdown. So I've been my entire financial channel has turned into political channel. But all right, I'm gonna let you go. I'll let you answer other questions. But just on a technical note, so Bitcoin can't actually subdivide more than 100, more than the 8 decimal places. Yeah, it's a computer science C++ limit. That was the maximum Satoshi could do. But there is the Lightning Network, and on the Lightning Network, there's other options. But on the main chain, there's also some kind of a C++ computer science limit, like the Y2K thing. But it's coming in like I think 50 years or something, and that one is actually legit.
Okay.
For a lot of computer
we'll cross shit that's 50 years out, and I'll be dead by then, so I won't care. Because with the amount that I smoke, there ain't no freaking way I'm making it into 105. Just FYI. So, like, I'm 55, guys. So, but no, thank you. No, what I'll say on this is like this is clearly I identified a while ago that Ukraine is an existential threat for everybody. It's an existential threat for the Russians. It's an existential threat even for the Turks. It's an existential threat for so many different factions within both the European and the American governments. It's everything. Like, if they lose in Ukraine, if the West loses in Ukraine, it will be it will be a game changer. And I don't think that. And the big question everybody should really have in their heads is, what's everybody's goal definitions of winning? Because they're not the Russians' goals. The Russians' definition of winning is different than the Americans, which is different than the Europeans, which is different from they're all different. So, at the end of the day, what I'm seeing in Ukraine, when I put my emotionless strategic hat on, I look at the way the Russians are prosecuting the war. I'm like, well, this is the way I would do it. It's gross. It's horrific. It's a tremendous, tremendous waste of life. And I'm never in favor of war. But you push me into a war, look, the Russians know how to fight a war in Ukraine, and they're doing it.
Yeah, I agree.
And and for the Ukrainians, all I'll say is this: no one ever went broke underestimating the vulgarity of the American public. No one ever went broke underestimating the arrogance of European elites, and I don't think anybody ever went broke underestimating the desire of Russian Jews to kill Russian Christians. And that may be a controversial statement, but I think it's true. And a lot of this is coming from that, and it's very sad. And we can argue about that, and I may be overstating it, but there's a lot to this, and I don't want to I'm not going down the Khazari Mafia thing. I'm not going into that area. I'm just saying there are very Deer point up earlier, but the divisions with Turkics versus Arabs and blah blah blah. There's a lot of these cans have been opened up, and at the end of the day, I keep blaming the Brits, and I think I'm right about that, because they just drive these wedges and create Russia anti-Russia, and that's what Ukraine has become. There's India and anti-India. There's there's splitting the Kurds up into 5 different countries for no good reason other than to sow dissent and to destabilize and to be able to spin up flashpoints whenever they want. And that's what I think about North Korea. That's what I think about the Indian-Chinese border conflict. That's what I think about the Indian-Pakistani border conflict. And I think finally we have people in charge in India and China that have finally begun to see the light about who's actually been doing this, and they've actually talked about it.
Yeah. Oh, speaking of India,
Sure.
like I was just looking at their currency, and it's devaluing, and it's frustrating me because I can't explain it. India should be doing super well. It's probably the same thing that the U.S. is doing to Turkey with their currency. They're starting to do it to India as well, because it makes absolutely no sense. And Istanbul has become a nightmare. I was there 2 or 3 times last year. It's so frustrating because of the inflation, and the government is not allowing like the taxis to charge more, or Ubers, and like no one's picking you up. You can't. It's a giant city, and you can't get an Uber or a taxi. Wow. It was a nightmare.
Yeah, no, I know, and I know that when you put someone like Erdogan under the kind of pressure that he's been put under, Erdogan, I still call him Erdogan. I don't know why. Mostly because I don't like him. But I understand. But I try to understand, the way he plays the game. I think he plays the game at the geopolitical level very well. But when you put a guy like him under the kind of pressure that he's under, you get really, really weird and aberrant behavior. It's just normal. Like when you put somebody under the kind of pressure that he's been put under, like it's just you're going to get weird stuff happen. And I've argued for a long time. I think he was right. For example, to not raise interest rates to 35%. Like, you know what I mean? Like, I remember listening to Zero Hedge go nuts over Erdogan prosecuting like weird monetary policy by cutting interest rates when his currency is collapsing. I'm like, well, if 20% is not high enough to stabilize your currency, maybe it's not the interest rate that is the cause of the currency collapse. Like, it doesn't matter. Like, there's this argument within kind of monetary policy and and currency policies to think, well, there's a linear response curve to interest rates versus inflation. And I don't think that's the case. I think it's much more sigmoid shaped in that it bends off towards, you know what I mean? Like they're above a certain rate, no matter what you raise the interest rate to, you're not going to get any effect. So, the whole like IMF prescription, well, you have to raise interest rates enough to stop the currency outflow. Like, yeah, so what? You can attract foreign capital, which is the reason why you're in the trouble that you're in right now in the first place. Like, no, you figure out a way to start, building a domestic economy that isn't dependent on the currency that just left your country. Like the last thing the Turks want to do is invite more dollars back into their economy, because then all you're doing is allowing the Paul Singers and the economic hitmen to reload and do it to you again. Like, it doesn't make any sense. So I think the relentless attack on the Turkish lira by the West, I think is some of it is Erdogan's own problems and that he's engendered, and some of it is malign actor. And I think this is part of the reason why the Russians are, I hate to say this, but they're his best friend. And the Turks are now a major conduit for sanctioned goods, high-tech goods, things that have been sanctioned that the Russians can't get a hold of. They're now flowing in through Turkey. And the Russians and the Turks, I think they just signed a similar agreement between Russia and Turkey that they did between Turkey and Iran, which is to merge the banking systems and allow the Russian ruble to flow freely in Turkey and the Turkish lira to flow into Russia and back and forth. I think eventually all of these policies that make things more expensive, they have a finite limit. And in the case of Turkey, they're not going to let Erdogan escape the West without maximum pain. And I think it'll be interesting to see what happens if Erdogan wins re-election and they can't get rid of him at that point. If all of a sudden things start to calm down on a capital flow front. And I think that the Chinese aren't going to put any more money into Erdogan until he wins. And if he wins, he may not win. But afterwards, you may see a whole lot more Chinese money flow into trying to stabilize Turkey economically. I'd watch for that. But right now, it's up in the air because of the upcoming election, and the pressure is always the hardest, the heaviest, right before an election, on in a pivotal country like Turkey. Same thing happened in Pakistan, right, with Imran Khan. So,
all right.
Can I just step in on this real fast?
Sure.
All right.
Please
go for your point.
Yes. So, I have two uncles which are in Turkey. One works for CHP. The other one's professor of economics in the city of Bursa. And for anybody who knows history, is where the Ottoman Empire was founded. So me and him were having this discussion. Now, if you look at AKP, which is Erdogan's party,
right,
what they say is that this was an attack from the West. Now, what my uncle says, and he did his PhD at Ann Arbor, not that it matters, but
right.
in economics, but this is what he said. And again, my family is very much anti-Erdogan, but that's a different situation. So what if you actually look at when Turkey increases its money supply, this coincides with an increase in gross FX reserves. So what happens is, like, if you were to look at the United States, when, let's say, they print money, and I don't like that term, but for simplicity,
right.
When they print money, they go and they buy, like, treasuries. When nations like Turkey or nations like Zimbabwe were printing their own currency, they were going and then using that to buy other currencies. So this isn't really an attack on the West. This is more of an issue with the West attacking Turkey. This is more an issue with Erdogan. And I think Süreyya, who's his daughter, Süreyya Erdogan, is actually married to the head of the central bank. So Erdogan, essentially, we went through 7 central bankers, maybe 8. And the reason is because everybody was like, we need to normalize monetary policy. Erdogan said no, he wanted cheap credit. And actually, for the first time in Turkish history, the deposit rate that you could get from holding money in the savings account was actually surpassed by inflation. Usually it was always positive on a real basis. So this was mostly, I would say, a problem with Erdogan from like a domestic standpoint. Right now, AKP will say no, the West is trying to attack us, this, that, and the other. But no, like this is you can actually go and you can look at the correlation of when they print money. There's an increase in FX reserves, and so essentially what they're doing is they're swapping their money for other foreign currencies, and so therefore they're simply they're supplying this market that has no demand for Turkish lira with Turkish lira, which then obviously weakens the lira. Now on the second point, this is a little bit different. The only thing is I'm on the different side again of Saudi Arabia and Iran. Saudi Arabia and Iran already had a tensions flare when they executed Sheikh Nimr. So I don't think that, which was a Shia cleric in the eastern side of Saudi Arabia. So I don't think relations on that side are going to normalize until Saudi stop executing Shia clerics in the east. I don't see really any normalization there. But that's a different, more theological discussion. But this is at least on the Turkey basis. What my family and me and my uncle have kind of talked about, and I can post some charts because going through the central bank, obviously their English translations are pretty shitty. Right. Right. But this is what at least I think is happening domestically in Turkey, because and this is my last point here, is what you see with a lot of developing nations is in the beginning everybody was very pro AKP. So let's say like 2001 up until like 2010, everybody in Turkey loved it. Turkey had the second highest, again, not that it matters, but, people look at it, nominal GDP growth in the world behind China. I think it was like, 5-6% a year. It was crazy GDP growth. Yes. And then you hit that inflection point where, if you're a nation that is a reserve currency, in let's say theoretical monetary economics, you can monetize over productive capacity. But if you start to monetize over productive capacity, you'll get high nominal GDP growth in the short run, and then you'll get a massive spike in inflation. And if you don't normalize monetary policy, that's persisting. And that's exactly what I think Erdogan has done. He's tried to continue this rapid GDP growth that they've seen at the expense of normalizing monetary policy. So that's okay. That's fair. That's been a fair criticism of Erdogan for a long time. Absolutely a fair point. So cool. Thank you.
Awesome. Aaron, you've been waiting patiently, so welcome to the stage. What you got? Aaron, we got you.
Yep, gotcha. Sorry.
No worries.
Yeah, enjoy everything. Thank you guys. But you guys were talking about time frames in terms of everything. I was initially thinking later this year things would kind of crash a little bit. But a lot of people talked about the housing market and such. If you look at FHA loans and what they actually started doing, because I degree in economics and been doing mortgages and banking for 20 years, but FHA just changed their guidelines for everything and what they're doing.
Okay.
All people have to do is, if they're in foreclosure, literally, 40, 50 days out from foreclosure, just call up their servicing company and tell them that they would like help. And they will take whatever is past due, put it to the back of the loan, and there's no questions asked. Even if they're close to not being able to make their payments, as long as they tell you they can make their payments, you put it to the back of the loan and you call it good. You don't have to submit pay stubs anymore. Nothing. They changed that March 1st. Those are public guidelines. You can read them on FHA's website. To me, this pushes thousands and thousands of foreclosures back. You're going to mess with the entire housing market and everything.
Yes, you are. No, I know, and what a shock. I look at this. I don't see anything from the Biden administration that tells me that they work for the United States. I just don't, right? And something like that tells me that, well, that heuristic is still valid. The at the same side of it, there's a thing here. We're gonna. I mean, it's that is very disturbing, and I'm not sure quite what to think of it. I'll try and give a hot take real quick here, but I think about it. I'm sorry. I was like, we've been doing this almost 3 hours, so I had to finally go get something to eat. And I shouldn't be eating after dark anyway, but I'm doing it anyway because fuck it. And I'm on, I think, my third cigar for this call. I'm wondering why they did this, right? I can see it both ways. Either we're going to, in the short term, we're going to protect the housing market so that there's no collapse and there's no blowout of, mortgage-backed securities and the rest of it, because maybe there's. I do know that like we're dealing with a CMBS issue, but more of it is happening overseas, right? So like you had like Blackstone the other day, formally having to default on a small CMBS, commercial mortgage-backed security over in Norway. There's going to be more of those, and but at the same time, like the Biden administration, the last thing they want to do is actually allow the banks. Okay, let's put it this way: if I'm correct, and the banking industry is at odds with the Biden administration, and the Biden administration is going to do everything imaginable to increase the liabilities and to hollow out the banking and to make to make life difficult for the banks, and create a bigger problem in the future. At the same time, win political points in order to not have any form of any popular revolt against them, because now it's still seen as, well, we're supporting poor people. We can't allow the evil banks to throw people out of their homes because they're not paying them. Yada yada yada. They're still playing this game with, student loan. So I guess at the end of the day, it's really no different than their student loan policy, right? Where they're telling the students they don't need to pay anything back, and this is again part of the meta narrative here has always been to kind of continue to double down on the Occupy Wall Street narrative, that it's the banks that have caused everything to go wrong in the United States, and that the Democrats still work for the little guy, and that's all complete nonsense. I'm not saying that the banks aren't evil or anything, because they are, and that they don't deserve opprobrium. They do, but at this point in time, to be playing cheap political games, when Fannie and Freddie are making money, and are refusing to exit conservatorship when they, clearly should. And that's another angle on this that I've got some thoughts on, but it's another recapitalization, part of the recapitalization story. I don't know. Interesting. Thank you.
Yeah, great insight from Aaron as always.
Yeah.
But I know you alluded to, we've been going at it for a little bit, so I'm gonna let John come in and ask the last question, and then we'll wrap it up.
Sure.
I don't want to have you smoking all your cigars tonight. Just we'll limit it.
My humidor is full. Don't worry about
it. All right, sounds good. All right, well, John, welcome to the stage. The floor is yours.
Thank you. I would like. I've been listening to you now for a little bit. I've not known you before tonight. I generally agree with everything you say, or at least that I've heard so far. Your perspective. You obviously have a really, strong understanding of history and good perspective on geopolitics and economics and monetary policy. I'm kind of looking at this from a longer term perspective and the impact of what's going on in our world today. I think about the economic system itself as one that is inefficient and ineffective, unstable. It's unjust, it's destructive, and in my view, unsustainable. I'm of the belief essentially that, environmentally, also the destruction that's occurring because of this economic system is a real existential threat. I think that we're hitting some tipping points, according to the environmental scientists. And I'm kind of concerned about future generations. So I was wondering what your view was of the fundamental system, the economic system that drives everything. Do you believe it's sustainable? And if not, where do you think we go from here? I guess I'd like to start with that.
Well, that's a great question, John. And no, I don't think it's sustainable. I don't think it's fair. I don't think it's good. It's not good for anything. I think we go back to what I said earlier. A corrupt money begets a corrupt society. A corrupt money with corrupt and cheap money does what? It engenders and incentivizes through the perverse incentive malinvested capital and wasteful, wasteful use of capital, and so much of that we react to, and we see these things as so much of this is we react to the symptoms and then craft policy to deal with symptoms without dealing with the underlying cause. So yeah, when I argue earlier about consumer sovereignty and property rights and through money and because it's moral and it's also fundamentally conservative of resources, both human capital in terms of time and physical capital in terms of the land and the air and the water. Well, yeah, like all of those things are impacted tremendously when you have a system that doesn't rationally allocate capital along, a proper using proper controls on risk. And when we sit around and respond, quite predictably to perverse incentives, then we shouldn't be surprised that we get, really weird outcomes. And it's not just, tranny bathrooms. It's this is a train derailment in East Palestine because we didn't spend because it was better to harvest profit off of a fully depreciated and unkept and unmaintained rail line as opposed to running a proper business that coordinates capital, that reinvests in itself on a regular basis. This is the problem here, and so this is part of the reason why I get really angry when I start thinking about, when I hear people talk about, well, China's economy is a potential village and blah, 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 blah. I'm like, yeah, maybe to some extent, but have you looked at how much, like I said earlier, how much of the quote unquote value add in the United States economy is actually just financialization? It's just making money on money. And then you watch the downstream effects of that, right? Like, where is all the spending? All the spending is in the upper, 2/5 of earners. Is where all the spending is. Everybody else is just barely subsisting. And then, and when you're subsisting, you don't really care about, survival does not, people in survival mode don't give a damn about whether they're polluting their land or not. They're in survival mode. And this is what this system has done, and it's why it's got to end. We put out when we put out the newsletter every month, the Gold, Ghosts, and Guns newsletter, Dexter White and I think very hard about the theme of the thing for the month and of each issue, and the series of articles, and they're all kind of braided together on a common theme. And for January's issue, on the front page, which is just a little title, a blurb, and a quote, and this is the issue, and then we get into the meat of the issue, past the title page. But there's always a hero image there. You know what that hero image was? It was a little tear off reveal thing, like one of those the things where you tear off to reveal the thing underneath, and it was our star doesn't equal zero. Our star is the risk-free rate of return. Like everything we deal with, all of the complaints, it's all this like idea that we can just have risk-free fucking money and then run around and act rationally because of it, and we're entitled to this. And there's too many people running around and just thinking in terms of our star being equal to zero. I was talking to Ted Oakley this morning. That's who I was talking to about this very thing this morning. I recorded a podcast with Ted Oakley of Oxbow Advisors this morning. It'll be out later in the week. And I didn't even really know Ted at all, but we had a wonderful chat about a lot of these very issues. And it came up obliquely within the conversation, but it's real. And this is why I applaud Powell saying, okay, no, this system has to go away. The coordinated central bank policy has to go away. We have to stop believing that this central bank dominated economy is a good thing. It's not. It's a terrible thing. And this is coming from the head of the most powerful central bank in the world. And that's the message of what Powell keeps putting out every time he opens his mouth and every time he acts. Now, I generally, believe that when central bankers' lips are moving, they're lying, right? How do you know a central banker's lying? His lips are moving. Same thing with a politician, right? So you watch what they do. Jim Rickards used to say for years that Mario Draghi was the best central banker in the world because he said little and did less, right? I don't happen to agree with Jim about that, but I don't disagree with the sentiment, right? So yeah, no, your point is really valid, and it's part of what actually drives so much of the analysis that we do. It's not just me, but it's my partner Dexter White in this. He doesn't, I do 90% of the public face of this, but believe me, I'm not a one-man band, right? And I've got a brilliant community that I've curated around me who are that subscribe to that same ethos, and we want a better life. We want a better world. And not just because, we want a better world because this one sucks, but we know why this world sucks. And so now it's a matter of, okay, how do we get
Well,
there?
Tom, I guess I need to go even a little deeper than that, because I'm going right down to the very notion, and this is not what Powell is admitting to. I'm going to the very notion that capitalism itself is a problem. It's a system that concentrates wealth, and with concentrated wealth comes concentrated power and abuse of power. We have currently a duopoly in the United States that is owned, it's been captured by the corporate ownership class and by the ownership of the six guys that essentially have controlling interest of every major industry, not just in the United States, but globally. And they also own the media, so they own the message. And
this is my theory of this. Davos, John. I don't believe that that's capitalism. I think that's the communist definition of capitalism. Capitalism to me is the voluntary exchange of goods and services and the voluntary coordination of capital and through time and people's comparative advantage to time. That's what capitalism is.
Well, voluntary voluntary, you can't when you have people that are born into such different circumstances, voluntary means nothing, because some people are born into a position where they get the education, they have the wealth, they have the resources, loving family. So to compare their circumstance to somebody else's and say that it's a level field,
This is a very Marxist perspective, and I don't agree with it. I'm sorry, John. I don't.
Okay, well,
I think it's a very Marxist perspective. I don't disagree with the sentiment that it's not voluntary is equal is a quality of opportunity, not a quality of outcomes. This is very important. Like, my family came from nothing. My family didn't have anything. Like 2 generations ago, we came over on the boat from Italy and we had nothing. We came away from a system of fascism and of creeping authoritarian into an open system that will allow them to generate wealth through their own wits. When the United States was a relatively free economy, when the wealth that you generate, which is the profit you generate off of your actions, compounds at a pretty stable freaking rate. And as long as you're allowed to keep that wealth. The system we have today is not capitalism. It's extractive.
Well,
it's extractive in that, and that by paying interest on the money you use to sell your labor, you have to pay interest on that money. Guess what? You're only 1% to 2% actually freaking profitable. Real capital compounds between 1% and 2% per annum in a real sense, period. And through history, it was 1%. And around 180 years ago, it doubled to 2%. You can argue that it was a mixture of property rights and access to higher energy density and a couple of other things. But that's it. And Gary North used to talk about this stuff all the time in Lou Rockwell.
I don't know anyone that would argue that the United States is a Marxist state.
I would. You're talking to one. I think that we're literally run. I believe Comintern never ended, dude. I think that since the communist takeover of the United States under FDR is what we're dealing with. Like, we have Marxism taught at every level of our educational system. We have a central bank. We have a progressive income tax system. We have a death tax. Go look at the 10 planks of the Communist Manifesto to bring about the thing. The United States has 7 or 8 of them. We have them all. It's already there. You've just been propagandizing and thinking you're still free.
Oh, I don't think.
I'd argue that it's actually more fascist than communist, but as far as I'm concerned, I'm very reductionist. It's all just goddamn.
Well, I agree with you that it's very fascist, but we're talking about how we move forward. So there's a guy like Richard Wolff who talks
collectivism. It's the needs of the collective outweigh the needs of the individual. The individual is not sovereign and is subservient to the whim of the collective, and not in any voluntary manner where they can opt out. No, they have to be browbeaten into conformity, and we will coerce your conformity at every turn.
Well, Tom,
you look at Western policy, and it's very clear.
Well, let me ask you this: Would you agree that it would be better to spread ownership? In other words, think in terms of worker co-ops where the workers themselves.
I'm not a big fan of anarcho-syndicalism, but I understand the argument for it. And if people want to do that, they're more than welcome to. Remember, I'm an anarcho-capitalist. I don't believe in fucking government. Like, morally, I'm opposed to government.
I'm not talking about government. I'm talking about the workers themselves owning the institution.
But I also think that anarcho-syndicalism is effectively would always collapse under the weight of its own internal inconsistencies as well. They almost always have. But if it works for a group of people, it works. But the whole, like, Richard Wolff argument about like Spain and Barcelona, the whole workers collectives over in Spain, I've heard those arguments before, and most of those things only really work because of frameworks that exist around them. I think that the workers collectives work as a metastable reaction to a tyrannical system, but they are metastable. Like all trade unions, all of that stuff, they're always metastable. They always collapse.
What we have now is 6 guys owning the controlling interest of every single major corporation out there, and the working class people.
And that is a function of 350 years of creeping central bank control over the issuance of new money and credit. Period. This is not difficult.
Well,
this goes back to the formation of the Bank of England, and now we're dealing with the end state of it. And so, yeah, well, there's no shock that we ended up where we are. But that's a symptom. What you're describing as a symptom of the deeper problem.
I'm saying we don't have a government. I'm saying that the government, the corporate oligarchy are one entity. They are.
Well, they are, absolutely. No argument. But guess what? That's communism, by the way.
When you talk about government and think about like the Soviet Union as communist, to me, that was state capitalism. What we did is they replaced the oligarchs, the capitalist oligarchs, with a handful of bureaucrats who were government employees. So they said,
it was the first version of the ultimate technocratic state, a la Orwell or anything else. I remember having this discussion with Alexander Mercouris like 4 years ago, and he said, "Yeah, Tom, what was the Soviet Union? It was the first attempt at a massive technocratic state. Well, what do you think the EU is? And what do you think the current American government is? I agree, but what's the enabler of this?
Well, how would you move forward? From where we're at, what's your proposal for moving forward and improving the system? What would you do?
I would do exactly what I'm asking Powell to do right now, which is to break down, as a start to break down the idea. Look, the reason that we're at the zero bound, that we went to negative yields and all of this stuff, was to preserve that wealth extraction system. They have already taken all the blood from all of us stones that they can get. There is nothing left. We're all broke. It has to come back the other way. The reason that they're so desperate to destroy the United States is because there's still the vestiges of the rule of law, not reality. The vestiges of rule of law, of institution, of the ability to all of those things, and to shelter your money. Remember, the United States is the biggest tax haven in the world. The Europeans hate us for this because they want complete control over all of your money. They want a central bank digital currency where they can program into it their social credit system and deny you any agency if you go against the state. That's what they want. That's the end state of what we're fighting. We are fighting that with people who are only 10% better than them.
But if I understand what
but we have to start somewhere, and the systems itself is so filled with so many inconsistencies and so much internal internal discrepancies that we have reached that end state where it cannot continue without going back to giving back some of the friggin' capital that they've stolen from us. They've got to put some of it back into the system. They've got to give some of it back to us. They can't go any farther.
That's been true throughout history. There's been times through history where the ownership class, once the concentration of wealth got so concentrated, they threw it back and forgave debt. Okay, they just gave it up. And so this has been happening throughout history. We're just another empire going through the collapse. This is nothing new.
I know it's nothing new.
But I'm
not saying it's nothing new.
You're saying the solution has something to do with Powell changing in some way. I don't see that.
No. The solution starts with that. This is the start of that process. The start of that process, because the forces of decentralization, i.e., Bitcoin technology, our ability to communicate, they don't have control over the micro. So they control the media. Who gives a shit? Nobody listens to the media anymore. Trust in the media is at 7%, dude. No one trusts the politicians. The institutions have all collapsed.
As a practical matter, how do we do it? Is what I'm asking you to tell me. I mean, what is it? What are the
You start by rebuilding your communities. You start by keeping the capital where it belongs. Well, I don't know I don't have a one size fits all solution for this problem. There isn't a one size fits all solution to this problem.
Well, I have one. And my solution, I'm actually running for political office. I'm running as president in 2024 as an independent, nonpartisan candidate. And my solution is remove all of the special interest money from the political system. Zero goes into it. And the way I would enforce that, because it would have to be a grassroots campaign if I could take the presidency, I would go down into every district. I'd have the popular support to go into every district and remove every single candidate from both of these parties. And so I created something called the Ballot Access Coalition. to break the political duopoly. Because if we don't own,
Sure.
so that's
we have the worst ballot access laws in the world, dude. I've been banging. I used to do practical libertarian politics here locally in North Florida.
right.
I gave it up because it was a waste of time.
Right.
Because 95% of the money that you spend is for getting on the ballot. You spend all of your energy doing that, and you get nowhere anywhere else. The practical solution to this problem is people taking back agency. People saying to themselves, "I will not be a tax cattle." Okay, and so find assets and build a base of assets that will get you through to the other side of this. I've been arguing this point with people. This is where it started with me. I said, build a platform of assets. I did an entire podcast with Chris Sullivan, who runs a crypto hedge fund, and he just kept banging the point over and over again. There are 5 assets in the world: commodities, gold, Bitcoin, real estate. Like, what else? What else is there? You should be accumulating those things, and then if you control those things, you have them, and there's no counterparty risk. They can't take them.
The ultimate asset,
and they
ultimate asset is people, and so.
Well, yeah, that's it.
Well, so that's why I have a grassroots campaign. The answer to the problem is to own the government, for the people to own it, and that means a grassroots movement abandoning.
No, the government itself is an agency of force and nothing more. Government is force. Okay, it is a system of picking winners and losers, and it is literally a band of thieves writ large. You get control of it today, and tomorrow somebody will always find a means by which to vector it off. You want a solution to the problem? That solution is inside of you. It's not outside of you. It is not an external system that's going to bring your emancipation. Your emancipation comes from being ungovernable from the inside and projecting that from the inside out. You have to opt out, and you've done part of it. Now, the big one here is thinking that in any way, manner, shape, or form, you can change the electoral system. You cannot. You will not. It will not happen in any fundamental way. But if you collect assets that are outside the system, that's where the Bitcoiners have it all right. That's what they're afraid of. And when you hear a central banker like Jerome Powell say he has no problem with an asset like Bitcoin, that's telling you that you have somebody in a very powerful position who understands the fundamental problem.
Well, what I think scares the rulers is an organized working class. What's always scared rulers throughout time. Every empire that's ever collapsed has collapsed at the hands of the working class. It's
only when things got so damn bad that they just lynched everybody. They just lynched everybody, which is what's going to happen in France in the next 18 months.
Huh?
Have you seen what's going on in France?
Yes, I agree.
They want to raise this. Yeah. Well, but that's not a solution. That's just beheading people. That's not a solution. Violent revolutions are not a solution.
It's a solution in Saudi Arabia, Tom.
I'm talking about a political revolution, and I'm talking about owning the government. And the only way to own it is to get rid of those people who are currently in office. You have to abandon both parties.
Well, yeah, but again, and then what happens? And then what?
Well,
and then you're going to be set with the exact same problem when everybody now starts trying to figure out what they want. And then you're going to wind up right exact in the same damn system.
No.
Republics don't work. Like workers' collectives, none of this shit works because people have different needs and different value systems.
Tom, you want to know?
Serious.
Labor with need. What we have is a system where you've got a lot of labor that
John, I don't need the campaign speech.
Yeah,
okay? I really don't. I don't need the campaign speech. I hear you, and I don't agree. You are fundamentally. I wish you well. I really do.
Yeah,
but I'm telling you, dude, I don't need the campaign speech.
Yeah,
I've been down this road. I've done this before.
Yeah, we've been running a while, so I appreciate John for coming up, but I don't really think I want somebody shilling some stuff on this space. But Tom, I really do appreciate your time, and everybody who's been listening and tuning in, please give him a follow. Check out his website. Check out all the stuff he does. Because I mean, you guys just sat and listened to him for almost 4 hours now.
Holy shit!
So he's
really?
Obviously got anything like that. Yeah. So. And I also have him coming on my podcast that'll be out on Monday next week. So be on the lookout for that. So, Tom, thanks so much for being generous with your time. And yeah, have a good one. I look forward to talking to you later this week.
Appreciate it. Thank you guys for everything. It was fun. Really was. I really enjoyed it.
Awesome. Glad you did. All right. Have a great rest of your night, everybody.
Bye-bye.